to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live chain of fear.
market full of idols.
I just walk with vision clear.
Planting seeds of solid.
While they chase attention.
Labor bring the harvest when you move with intention. Used to chase every candlelight to move with salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline arise. Cause my vans trading kill quicker than a thief at night. Jericho standing tall like impossible resistance. But faith make walls collapse with consistent persistence. Joshua marching even when it made no sense. The patience in the rocket when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create kings sharply. Now I move strategic like the shepherd with the stone. Yeah, we burst the giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild the traitor instead. Jericho walls following my faith get loud. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get them tested. Escaping Babylon,
I can live chain of fear.
market full of idols.
I just walk with vision clear.
Planting seeds of solid, while they chase attention. Labor bring the harvest when you're moving intention. I seen traders worship poverty like a golden calf. Losing themselves chasing candles, moving way too fast. The wisdom worth more than silver and the gold. The disciplined mind worth more than what's inside your palm. Following up a lot conquer when I say I had to break resistance. Sparking levels and the chains that kept protecting my decisions. Now they set a cleaner, spirit moving sharper. Every setback became fuel for moving smaller. They panic with the crowd when the headlines hit. I move like no one building while they left that. Preparation look foolish before the rain arrive. But survivors think different when they fighting to survive. Fast seasons feeling buried underneath the pressure. The seeds gotta die before they multiply forever. That's kingdom mathematics, that's the Lord. So reap a patient trader eat, non-emotional trader sleep. Yeah,
It's bigger than trading.
it's about mastering yourself.
Anybody can enter a trade.
You can conquer emotion.
Escape Babylon.
Cycle,
Move with wisdom.
build with faith.
Smart action trading.
They told us chase fast money,
Bad money.
worship greed,
Love for trading.
panic with the crowd,
Modern Babylon.
build on fear.
Distraction and emotional slavery.
But discipline,
Patience.
wisdom,
Wisdom.
that's how you escape the system.
Smart action trading.
Yeah, Jericho walls falling when my faith get louder. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live chain of fear.
market full of idols.
I just walk with vision clear.
Planting seeds of solid.
While they chase attention.
Labor bring the harvest when you move with intention. Used to chase every candlelight to move with salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline arise. Cause my vans trading kill quicker than a thief at night. Jericho standing tall like impossible resistance. But faith make walls collapse with consistent persistence. Joshua marching even when it made no sense. The patience in the rocket when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create kings sharply. Now I move strategic like the shepherd with the stone. Yeah, we burst the giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild the traitor instead. Jericho walls following my faith get loud. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get them tested. Escaping Babylon,
I can live chain of fear.
market full of idols.
I just walk with vision clear.
Planting seeds of solid.
body chase attention.
Labor bring the harvest when you're moving intention. I seen traders worship poverty like a golden calf. Losing themselves chasing candles, moving way too fast. The wisdom worth more than silver and the gold. The disciplined mind worth more than what's inside your palm. Following up a lot harder when I say I had the right resistance. Market levels and the chains that kept protecting my decisions. Now they set a cleaner, spirit moving sharper. Every setback became fuel for moving smarter. They panic with the crowd when the headlines hit. The move they know a building while they left that hit. Discreparate and look foolish before the rain arrives. But survivors think different when they fighting to survive.
Fast seasons feeling buried underneath the pressure. The seeds gotta die before they multiply forever.
That's kingdom mathematics, that's the Lord's soul reaper. Patient trader eat, non-emotional trader sleep.
It's bigger than trading.
It's about mastering yourself.
Anybody can enter a trade.
You can conquer emotion.
Escape Babylon.
Cycle,
Move with wisdom.
build with faith.
Smart action trading.
They told us chase fast money,
Bad money.
worship greed,
Love for trading.
panic with the crowd,
Modern Babylon.
build on fear.
Distraction and emotional slavery.
But discipline,
Patience.
wisdom,
Wisdom.
that's how you escape the system.
Smart action trading.
Yeah. Jericho walls falling when my faith get louder. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live chain of fear.
market full of idols.
I just walk with vision clear.
Planting seeds of solid.
Body chase attention.
Labor bring the harvest when you move with intention. Used to chase every candle like the move of salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline arise. Cause revenge trading kill quicker than the thief at night. Jericho standing tall like impossible resistance. But faith make walls go after consistent persistence. Joshua marching even when it made no sense. The patience in the walking when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create kings sharply. Now I move strategic like the shepherd with the stone. David burst the giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild a traitor instead.
Jericho walls follow when my faith get loud. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get them tested. Escaping Babylon, I can live chain to fear. Market full of idols, I just walk a vision kid. Planting seeds of solid, body chase attention.
Labor bring the harvest when you're moving intention. I seen traders worship poverty like a golden calf. Losing themselves chasing candles, moving way too fast. The wisdom worth more than silver and the gold. The disciplined mind worth more than what's inside your palm. Following up a lot harder when I say I had the right resistance. Market levels and the chains that kept protecting my decisions. Now they set a cleaner, spirit moving sharper. Every setback became fuel for moving smarter. They panic with the crowd when the headlines hit. The move they know a building while they left that hit. Discreparate and look foolish before the rain arrives. But survivors think different when they fighting to survive.
Fast seasons feeling buried underneath the pressure. The seeds gotta die before they multiply forever.
That's kingdom mathematics, that's the Lord's soul reaper. Patient trader eat, non-emotional trader sleep.
It's bigger than trading.
It's about mastering yourself.
Anybody can enter a trade.
You can conquer emotion.
Escape Babylon.
Cycle,
Move with wisdom.
build with faith.
Smart action trading.
They told us chase fast money,
Bad money,
worship greed,
love for trading,
panic with the crowd,
modern Babylon,
you don't fit.
distraction and emotional slavery,
But discipline,
patience,
wisdom,
wisdom,
that's how you escape the system.
smart action trading.
Yeah. Jericho walls falling when my faith get louder. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live shade of fear,
market full of idols.
I just walk with vision clear,
Planting seeds of solid.
while they chase attention.
Labor bring the harvest when you move with intention. Used to chase every candlelight to move with salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline to rise. Cause my vans trading kill quicker than a thief at night. Jericho standing tall like impossible resistance. But faith make walls go after consistent persistence. Joshua marching even when it made no sense. The patience in the rocket when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create king sharply. Now I move strategic like the shepherd with the stone. Gave me burst of giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild a traitor instead.
Jericho walls falling when my faith get loud. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get them tested. Escaping Babylon,
I can live shade of fear,
market full of idols.
I just walk with vision clear,
Planting seeds of solid,
while they chase attention.
labor bring the harvest when you move with intention.
I seen traders worship poverty like a golden calf. Lose themselves chasing candles, moving way too fast. The wisdom worth more than silver and the gold. The disciplined mind worth more than what's inside your palm. Following up a lot harder when I say I had to break resistance. Sparking levels in the chains that kept affecting my decisions. Now to set a cleaner, spirit moving sharper. Every setback became fuel for moving smarter. They panic with the crowd when the headlines hit. The move they know were building while they left that hit. Desperate look foolish before the rain arrives. But survivors think different when they fighting to survive.
Fast seasons feeling buried underneath the pressure. The seeds gotta die before they multiply forever.
That's kingdom mathematics, that's the Lord's own reaper.
Patient trader eat, non-emotional trader sleep. It's bigger than trading.
It's about mastering yourself.
Anybody can enter a trade.
You can conquer emotion.
Escape Babylon.
The cycle,
Move with wisdom.
build with faith.
Smart action trading.
They told us chase fast money,
Bad money,
worship greed,
love for trading,
panic with the crowd,
modern Babylon,
you don't fit.
distraction and emotional slavery,
But discipline,
patience,
wisdom,
wisdom,
that's how you escape the system.
smart action trading.
Yeah. Jericho walls falling when my faith get louder. Used to trade emotional, now my spirit's stronger. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live shade of fear,
market full of idols.
I just walk with vision clear,
Planting seeds of solid.
while they chase attention.
Labor bring the harvest when you move with intention. Used to chase every candlelight to move with salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline to rise. Cause my vans trading kill quicker than a thief at night. Jericho standing tall like impossible resistance. But faith make walls go after consistent persistence. Joshua marching even when it made no sense. The patience in the rocket when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create king sharply. Now I move strategic like the shepherd with the stone. Gave me burst of giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild a traitor instead.
Jericho walls falling when learn my fake it loud. Used to trade emotional, now my spirit's strong. Trying to worry building while they got it every step. Now the pressure build down as every time I get them tested. Escaping Babylon, I can live, train to fear. Market full of idols, I just walk a vision kid. Planting seeds of silence, while they chase attention. Labor bring the harvest when you're moving intention.
I seen traders worship poverty like a golden calf. Lose themselves chasing candles, moving way too fast. The wisdom worth more than silver and the gold. The disciplined mind worth more than what's inside your palm. Following up a lot powder when I say I had to break resistance. Sparking levels in the chains that kept affecting my decisions. Now they set a cleaner, spirit moving sharper. Every setback became fuel for moving smarter. They panic with the crowd when the headlines hit. I move like no one building while they left that hit. Discreparation look foolish before the rain arrives. But survivors think different when they fighting to survive. Fast seasons feeling buried underneath the pressure. The seeds gotta die before they multiply forever. That's kingdom mathematics, that's the Lord. So reap a patient trader eat, non-emotional trader sleep. Yeah,
It's bigger than trading.
it's about mastering yourself.
Anybody can enter a trade.
You can conquer emotion.
Escape Babylon.
Cycle,
Move with wisdom.
build with faith.
Smart action trading.
They told us chase fast money,
Bad money,
worship greed,
love for trading.
panic with the crowd,
Modern Babylon,
you don't fit.
distraction and emotional slavery.
But discipline,
Patience,
wisdom,
wisdom,
that's how you escape the system.
smart action trading.
Yeah, Jericho walls falling when my figure loud. Used to trade emotional, now my spirit strong. Joshua rebuilding while they doubted every step. Now the pressure build diamonds every time I get tested. Escaping Babylon,
I can live, shade of fear.
market full of idols.
I just walk a vision clear.
Planting seeds of silence.
While they chase attention.
Labor bring the harvest when you move with intention. Used to chase every candlelight to move a salvation. Lost inside the noise, trapped in desperation. Babylon system got the masses moving blind. Over leveraged souls getting swallowed by the grind. See the charts became mirrors showing pride and greed. Every red candle exposed what's inside of me. Had to crucify emotion, let discipline arise. Cause my vans trading kill quicker than the thief at night. Jericho standing tall like impossible resistance. But faith make walls go after consistent persistence. Joshua marching even when it made no sense. The patience in the walking when you wait for confirmation. See the weak chase entrance, the wise wait calmly. Person either burst pipes or create king sharply. Now I move strategic like the shepherd with the stone. Gave me burst of giants every morning at the hope it don't fold. In the wilderness, the promise still ahead. Every loss ain't destruction. Sometimes God rebuild the trader instead.
Jericho walls following my fake it loud. Used to trade emotional, now my spirit's strong. Trying to worry building while they got it every step. Now the pressure build down as every time I get them tested. Escaping Babylon,
I can live, train to fear.
market full of idols.
I just walk a vision kid.
Planting seeds of silence, trying to chase attention. Labor
The information shared during this live stream is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. All trades, ideas, and strategies discussed are my personal opinions and are not recommendations to buy or sell any securities. Trading involves risk, and you should always do your own research and consult with a licensed financial professional before making any investment decisions. You are solely responsible for your own trading results.
Top of the morning, traders, and happy Wednesday, July 29th, and welcome to the most value-packed live trading show, where we live trade, breakdown charts, cover high-impact events, and talk trader mindset. Hope everyone had a great day yesterday and is ready to kick off another opportunity-filled day. The next 48 hours, especially today, is going to be the busiest 48 hours of the month, busiest 48 hours of the quarter. So we have you covered wall-to-wall from the open to the close. We're going to have FOMC for you. We're going to have the rate decision. We're going to have the reaction to the decision. We're going to have the press conference. Of course, we're going to have our live trades as well. I'm going to share my strategy during the during the decision as well. So make sure to like the video, guys. We have a marathon stream today. Smash the like button. Let's get to 200 likes today. Okay, 50 likes at a time. First goal is to get to 100 before 10:30. We're officially open. No gap up, no gap down. We're seeing some weakness across the indexes on the Dow, surprisingly. The Dow has the most amount of relative weakness in relation to all the major indexes. Okay, so good morning, good morning, good morning, good morning, guys. We're officially open. Good morning, good morning, good morning, good morning. All right, if you're interested in joining our community for the delay-free ad-free stream, along with access to all the top resources, scan the code on screen. Use the link up top for the starter pack special. Starter pack special will be being phased out at the end of August. Will be gone. All right, so that's going to be a once in a lifetime chance to get everything at that price. All right, so whatever you need, everything is available in the description. So we're open here. Okay, let's take a look at SPY. I want to see SPY, not QQQ. Okay, SPY. So Shockwave 5 first on the clock. We're seeing Apple pushing nicely. Keep in mind, guys, we have a jam-packed earnings calendar as well. FOMC, crude inventories at 10. We have Meta reporting, Microsoft reporting, Hood reporting. So I would say, hands, don't trade Meta. Don't trade Microsoft. Don't trade Hood. Don't trade ARM. Don't trade QCOM. Don't trade Starbucks. Okay, don't trade Apple, Amazon, Coinbase. All these names. If it's within 48 hours of its earnings, the IV is going to start to spike. The IV is going to start to elevate, and it can start to get reduced slightly from time to time. So you don't want to fall victim to IV crush. All right. So very, very important. You do pay attention to that. All right. So you can trade whatever you like, but if you don't have an earning specific strategy, I would avoid trading those names because they're IV and they're going to be tremendously overpriced. So far, we're trading below that daily open. We're trading below that PML along with that 50% retrace to daily. We're smack dab in the middle of prior day's range. Smack dab in the middle of prior day's range. Smack dab in the middle of prior day's range. If you're a first-time viewer, let us know where you're joining from. Long-time viewers, take the next steps, jump in our community. We are seeing some activity on VIX. Like we talked about VIX 19 being critical. We talked about crude. Crude is approaching that 85. All right, we did get some news of retaliation strikes from the U.S. To Iran. So it looks like that deal didn't even barely lasted a week. So we can anticipate Exxon making a move to the upside. Okay, so Exxon starting to push. Small caps out of the pack is leading the way to the upside. Let me fix the screen on YouTube. There we go. So the full screen is what I remember to see. Boom, there we go. Okay, good morning, guys on YouTube. Good morning. Poll question for today, very straightforward. Bullish, bearish, neutral. Leading into FOMC. If you ask me, I would say neutral. All right, that's just my take. All right, until proof otherwise, with VIX starting to spike above that 19. So we're seeing some strength in the Qs. Strength in the Qs, guys. Strength in the Qs. Shockwave 5 coming up. Shockwave 5 coming up here. On our hourly, we're directional to the downside. We're failing to hold enforcement. Qs are getting bought up. Qs are getting bought up. Okay. We're failing to hold enforcement. VIX above 19. Keep a close eye on that. Sustained separation will be key. NVIDIA starting to push the upside. Okay, Shockwave 5 is coming in. Just be mindful of that VWAP up there. Shockwave 5 on the Qs as well. Keep a close eye. Good morning, good morning, good morning, guys. Let's get caught up on the YouTube chat. Good morning, good morning, good morning. Good morning, good morning, good morning. Good morning, George, and everyone. Please hit the like button when you come in. God bless you and your family, health and economy, and followers. Amen. God bless everyone joining us. Abundance and overflow to all. Matthew 11:15. He that has ears to hear, let him hear. Amen. Good morning, Sid. Thank you for supporting the channel. Good morning, BT6305. Good morning. Good morning, Francis. Good morning, Paul Man. Good morning, Vanuz. Good morning, guys. Good morning, good morning, good morning. I'm neutral, right? So you have to prove to me the market has some proving to do. All right, so I think of me, I'm a bandwagon fan. All right, so I just go with the winner. I have zero loyalty intraday. I'm not bullish. I'm not bearish. It's just if it's bullish, I'll be bullish. If it's bearish, I'll be bearish. If it's neutral, I'll be neutral. So I have no loyalty to the bulls or bears intraday. Long term, all right, forever a bull. I have no loyalty to the bulls or the bears. Okay, VIX starting to get that rejection. We're starting to see Exxon slide here. Keep in mind, you see this zone right here, team? This zone right here is smack dab in the middle of prior day's range. And that smack dab in the middle of prior day's range is also smack dab in the middle of the previous day's range. Right? So what that simply means is over the past 3 days, okay, 2 days, and of course including today, this is what's going on. We're compressing. It's going tighter and tighter and tighter. I always say compression is good, okay, if you're an expansion trader, because on the other side of compression is expansion. It's just a matter of timing and a matter of waiting. You don't know when, but eventually it will expand. Okay, we are directional on the hourly here, so the bears are in control on the hourly. They're just trying to keep that enforcement. Okay. Small caps continue to push the upside. Small caps look clean. Small caps have a lot of traffic up ahead. Be mindful of that. We have Walmart possibly brewing to the downside. We have Apple pushing. I didn't get a chance to look at Apple's IV, but that's probably going to start to push the upside. We have United Health for healthcare name. Palantir on watch as well. All right, keep it simple today, guys. Keep it simple. Size down. If there's a day that you're not going to trade, today might be the day. All right. Everything is inside except for the down. The down is the one that's directional to the downside. I might have to go a Shockwave 5 again on SPY. If we do, look at the IV. Can someone tell me what the IV is? Can someone tell me what the IV is on SPY? Can someone tell me what the IV is on SPY? Put in the chat. Okay, what is the usual IV? All right, based on what we've been seeing, not the HV. Don't look at the HV, but just the usual IV you've been seeing for the past, on a rolling basis, past 5 trading days. All right, that's why it's so important to always look at the IV. Right. So the IV right now is 35. 35, 36. Usually we're between that 23 to 27. Past few days. All right, we got as low as 20. We got into the teens a couple times, but usually we're in that territory. So IV's already slightly elevated without the VIX even being at 20. So if the VIX starts to make a move to the upside beyond that 19, what's going to happen to the IV? It's going to continue to accelerate. Exactly. Now it's 30 plus. All right. So now if you take a look at the contract prices, you'll start to notice, okay, contracts are more expensive. All right. These small nuances, guys, it makes a big difference, especially if you're trading options. The details matter. The details matter. Okay. The details matter. I'm looking for separation here. If we can get it. No separation. Looks like JP wants to slide back that daily downside breaker. We got Exxon sliding. We got Google pushing to the upside. Google's starting to make some strides into the jaws of that gap from earnings. Qs are starting to fade. Bearish engulfing candle possibly bring on the Qs if they fail to hold that 673.23. They're testing that nice key zone there. Okay, between 50% retrace of the daily and that PML. All right, Qs are testing that. SPY testing PML as well. Kind of double, exactly. That's a no thank you zone for me, 100%. Right, so these details matter, guys. These details always matter. So it's either you avoid it or significantly size down. Because even if you just say if you take 20 contracts, usually the 20 contracts you take today, they're not going to be the same as they were yesterday. All right, so you have to adjust your risk parameters. And why is the IVs higher? All right, the market is going to try to price in the reaction to the decision. We know we're leaning towards 70+%, no change. So look at this. We are smack dab in the middle of prior day's range, hugging this zone. We didn't take out Shockwave 5, either side. Okay, smack dab in the middle. All right, sellers are present here on this hourly candle. Sellers are present. Okay, the question is if they're present, can they expand this below here and come into these targets? Okay. The fact that the chart is not fitting exactly on the screen. What do you guys think of the new overlay? Folks on YouTube, what are your thoughts on the new overlay? Let me fit it right in there. Okay, that's better. Okay. Shockwave 5, Shockwave 15 time as well. So Shockwave 5 and Shockwave 15 are going to compound, all right, as a compound level. They're going to be identical. So let me take out the Shockwave 5 table. Shockwave 5 and 15, they're compound levels. That means when the levels are the same. So if it's a compound level and it's inside, it just goes to show us how much of a chop we're in so far, how much indecision there is. Our clock is on the top left hand side. Chop, chop, chop. Small caps, they do look like they want to break, but again, they have some overhead resistance, so you'll be able to be quick on those TPs. Okay, we have JPM sliding to the downside. JPM sliding to the downside. So financials, we're seeing some profit taken on financials. See if that can hold below that weekly level. JPM, let's take a look at the contracts. JPM, you want to be mindful of their spreads. I don't think I've traded JPM all year. And these are zeros, guys. These contracts expire. These are Friday's contracts. But the other ones, mega cap tech names, guys, they do have zeros available. So JPM, you want to be very, very aware of the spreads. Okay, you want to respect the spreads, mid or bid. Tesla looks appealing. Tesla. The 300 puts. I'll add that to the list. Even Tesla's IV is a little elevated. Okay. But if it can start to crack, it does have some room to drop once it gets past 304.21. SPY. So basically, those zero DTEs right now, they're trading at the money for about $300. Usually they trade anywhere between $1 to $1.50, I would say. At the money, or at 1 point out the money. Okay, so that means for you to get an equivalent contract as far as costs, you have to go basically 3 to 4 points out the money. And that basically completely changes what you're trading. Okay, we have Amazon coming up as well. Amazon, keep a close eye on the IV on Amazon. Walmart, if Walmart wants to go, that is a potential candidate if we do start to sell off. I want to see sustained separation on the VIX though. VIX. Walmart 114 do look appealing for the upside if it continues to push. JPM starting to slide. Tesla, the 300 puts. If everything starts to fall off a cliff, so I'll use Tesla as the proxy. Everything sells off, Tesla can be a candidate. Tesla, the only thing with Tesla is that PML below it. Apple broke. If you like Apple, if you take Apple, good. Be mindful, Apple. All right, earnings tomorrow. All right, so be mindful, Apple's IV. Be mindful, Apple's IV. Scale out on Apple. Qs. If Qs fall below PML, decisively slice and dice to that level, and SPY starts to get that break below this put trigger. All right, I'll be there for Tesla. I'll be there for Tesla. Tesla puts, 300 puts. All right, but I'm waiting for that break to take place. Okay. Okay, SPY. See if SPY can start to crack. Qs are looking like they want to crack as well. All right, remain patient. Apple, Scale out on Apple if you took Apple. Apple's contracts. Okay, IV's 46, not too elevated quite yet. We'll start to climb. See if it can start to fade. Okay, here goes SPY. There goes the Qs. Qs are starting to slide. There goes the Qs. There goes SPY. Qs are starting to slide. See if Tesla can join the party. See if Tesla can join the party. I like that slide on SPY. I like the slide on Qs. If you took that, manage accordingly. Okay, TP1 about to be hit. VIX is starting to go, guys. VIX is starting to go. VIX is starting to go. This was basically driven by the Qs. Qs, now the question becomes, can the Qs stay below that PML? 50% retrace, okay? If the Qs can stay below that key zone, if you waited for that to scale out, good, good, good. Waiting on Tesla here. There goes Nvidia. JPM, what a drop on JPM. Okay, so Nvidia, Tesla coming up. We got SPY coming up as well. Look at that, guys. Look at that. If you took that, dollar signs in the chat. So Shockwave 5 entry would be there. Shockwave 15 entry would be here. I want to see Tesla start to crack here. There's some stubborn buyers on Tesla. Small caps going as well. VIX is going, guys. VIX is going. So be on the lookout for Walmart to the upside. If you want to trade Apple, Apple retest. Be mindful, right? We're kind of running out of a little bit of room, right? So be mindful of buying those lows into lower lows. We're seeing synchronized selling across the board. Synchronized selling across the board for this stretch. JPM falling off a cliff. See if Walmart can start to go. Two names I'm watching is Walmart and Tesla. Tesla to the downside, Walmart to the upside if the selling continues. If you took this already, okay, you can be done. You can literally be done for the day. This setup took place on small caps, took place on QQQ, mega caps, and the Dow as well. Okay. So the one benefit of high IV is when it works in your favor, it really works in your favor. That's at 1.3, $1.30 drop there. Okay, no horse in the race currently. I can be in the reclaim camp. Reclaim. Failed reclaim camp. I can be there. I'm keeping a close eye on Tesla here. All right, there goes Nvidia to the downside. TP1 hit on JPM. If you took JP Morgan, TP1 hit. Okay, let's see if Tesla can start to go. So Tesla, that support needs to break. The big danger with Tesla, guys, is that PML down there. All right, that 304.21. All right, so if I do decide to take this, 305 is right there. I want that 305 to fail at 305. The 305 buyer is very stubborn. Fail 305. Trigger me in and slice and dice the 304.21, and we have green grass. All right, but it's hard for me to go short if we're above 305. Crude oil inventory is 1030. Be mindful of that. Tesla, Tesla, Tesla. Look at SPY. Anyone take SPY? Dollar signs in the chat, guys. Dollar signs in the chat. Keep a close eye on Walmart and Tesla. So if Tesla starts to present an opportunity, trailing feature is on. Trailing stop feature is on. TP2 hit. TP2 hit via shockwave 5. Okay, see if Tesla can start to go here. Go, go, go. I want to see a slice and dice through that level. Okay, I want to see a decisive break here on Tesla. Okay, I'll take Tesla right there. I'm going to Tesla puts. Stop conservative. A little bit of an early entry. I want Tesla to stay below that 305. Okay, my stop is conservative, but what would give me some confidence is Tesla stay below 305. Okay. If you took Walmart, congratulations. Tesla's up 12. TP if you need to. All right, TP. There goes Tesla. Up 12, up 13, up 15, up 17, up 20, up 21. I'm going to take a majority off right there on Tesla at 20%. Holding runners. There we go, Tesla. There we go, Tesla. There we go, Tesla. Now Tesla stay below pre-market low. I don't want it to get back above pre-market low. Okay, 20% on Tesla as everything starts to fall. Look at Walmart. If you took Walmart or Tesla or SPY, guys, you got to pick the one you want to take. All right, congratulations. All right, there's an abundance of opportunities, not a lack of opportunities. You just have to take the one that coincides and aligns with the things you're looking for. So on this stretch here, after taking profits at 20 on Tesla, I want to see us successfully hold below 364.21. Okay. Very tight leash on the stop, maybe break even. All right. Okay. Let's see if it doesn't continue to push. So no close back above that level on Tesla, those runners. Okay, I'll close runners right there, close to break even. All right, so quick scalp on Tesla. If you took Walmart as well, Walmart win as well, guys. Those are some good scalps, 20% scalp on Tesla. If you took SPY to the downside, congratulations. So whether you took Tesla to the downside for a scalp, if you took JP Morgan to the downside early, if you took Apple to the upside, Walmart to the upside, SPY to the upside, QQ to the upside, that stretch already took place. That move already took place. Okay, that move already took place. All right, the biggest thing with for me was Tesla's PML. Right, I wanted to target that PML and see if it has more beyond PML. All right, so being a little quick on the TP was important there. Targeting that PML. We're coming back with that retest. So good TP on Tesla for that scalp. Didn't even go to scale out. Nvidia falling off a cliff. If Tesla can fall back under, it might double dip, but it looks like we need extreme weakness. Like this weakness has to continue on SPY for Tesla to continue to break down. So what this blue line you're seeing is a trailing stop provided by the indicator. All right. So if you did take this, if you have a trailing stop set to dynamic, you'll still be in this position with your runners if you're going to use that trailing stop feature. All right. So this took you home to TP2. Okay. So it went beyond. Okay, that's 4R. Looks like JPM might be the winner here. JPM, nice push on JPM. Nice bounce on Apple. Okay, trailing stop hit. All right, so if you got trailed out right there. Okay, so you will capture $1.18 out of $2. If you took it all in TP2, okay, you can capture $2 and some change. Okay, so new hourly candle here. So first trade of the day worked in our favor nicely. Just runners didn't have a lot of room to run. Quick scalp on Tesla. See if that scale out can print. So a couple ideas I'm looking to entertain is, of course, potential retest of this territory. Shockwave 30. Double dip on Tesla. Walmart reclaim. Walmart and Tesla provided quick scalps. All right. So what we want to see, look what happened, guys. VIX got to 1945 and rejected. So we want to see the VIX go beyond 1950. All right. Let's get the likes up first. 30 minutes of the day in the books. Let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. Who caught SPY? Who caught QQQ? Apple, JP Morgan, Tesla. Tesla didn't go to the same extent. Good morning, news. Good morning, Georgia. Hussein stopping by to show love. What's up, Hussein? Hope all is well. Hope all is well on your end. Hussein used to be a tremendous diamond hand trader, right? So he would get these astronomical gains. Would be in a trade. I'll probably get maybe 30-40% out of it. He was tremendous at extracting 600%. Okay, same trade, right? But that was what he was great at. Good morning, good morning. Agree neutral, 1820, 1850. Never mind, I see it perfect. Good, good, good. Good morning, Apple going. Good morning, folks. Beautiful job, Maurice. Took Walmart. Good, good, good. Good morning, Diego. Okay, take a minute, guys. If you haven't already, smash the like button. Let's get the likes up. Smash the like button today. We can break our record of 200 likes. All right, we're going to have the FOMC coverage for you. We already took one trade. We provided multiple ideas. These are fast-moving markets, okay? So it's on you to take advantage of the opportunities. It's on you to lock in the profit and, of course, define your risk before taking the trades. Okay, define your risk before taking the trades. So the ones that are performing or providing the biggest moves are NVIDIA, the drop on NVIDIA and the drop on JP Morgan. Do you think SPY will continue up? SPY is still within prior day's range, so it's still indecisive. So SPY is indecisive. It doesn't know what it wants to do. All right, has not made a big decision. Intraday, we can see structurally we made this nice swing, this swing low there. All right, structurally we made our first move to downside separation from this key zone, but bigger picture. SPY is indecisive. And potential compression breakdown brewing here. NVIDIA, the past few days, NVIDIA starting to look like the past now week and some change. We've been saying it. It's starting to look like its old self again, little by little. Potential double dip on small caps. If we slide back the downside. Okay, let's take a look at, okay, we got memory still bottoming out. We got financials sliding. So financials are sliding, guys. The money's coming out of financials. Money's coming out of financials. How we doing, strikers? How we doing, guys? How we doing? How we doing? How we doing? Tesla puts up 40, already trimmed 80. Beautiful job, Civ. Yeah, they're moving very fast, right? So if you're not comfortable with the move, nice breakdown. Beautiful job, JB. Hope all is well on your end, JB. Yeah, I can't wait till you get back. Ford. I will take a look at Ford. Chop, chop, chop so far. No real discretion. 100% direction. All right, see profit, take the money and run. Realized, unrealized. It's gonna be the best approach. Okay. Okay, it doesn't count until it's realized. Okay, so SPY's Ivy still ticking a little higher. So the question now becomes, okay, we got our first leg. All right, first leg comes in. Okay, we get this nice little breakdown at that key zone. And so now is this just an accumulation for a second leg? Okay, if it is, see if we can collide with the 9 MA, collide with some key levels. And you want to see the VIX stay above that 19, between 19 and 1914. I'll test the slide one more time. Potential double dip opportunity. You can't spend adrenaline at the store. 100%. So Tesla, if it comes back into play, I need SPY to make lower lows. I need the Qs to make lower lows. I could possibly send Tesla to the lows of the day after that view out projection. All right, that initial push lower. It did push it to VWAP. Didn't get a close on the 5 above it. Actually, it did. If you held on to it, didn't take profit, maybe got stopped out. So potential double dip. I'm looking at Tesla for double dip opportunity. Double dip opportunity potentially coming up on Tesla. What's giving us the biggest problem is this pre-market low. All right, this pre-market low and this low down there. So if I'm looking for that breakdown, I'm looking for a push into that territory. Target the lows of the day. Okay, Tesla starting to break here. So you can hold below that level. See if a signal can get generated. I want SPY to make a low of the day. Okay, SPY Qs that didn't make a lows of the day yet. I want SPY to make lows of the day and Qs to head towards there because we are seeing a little bit of divergence there. If you took the retrace reject on small caps, good. Okay, Tesla come back in just a little bit. I want to get that good entry. I want that 1 minute candle to close. Let that candle close. I don't want to see a double bottom here on SPY. I don't want to see a double bottom here on SPY. I want to see a straight slice towards that 736 and VIX knock out that 1945. Okay, trying to time Tesla here. Okay, no position yet. Small caps provide a nice little opportunity. Double dip there if you missed it. Retrace, reject, fall back under. Okay, reclaim that level and fall back under it. Those type of entry models have been working out really well. VIX get past that 1945, continue to accelerate. SPY break those lows, make lows a day. Okay, I'll take Tesla right there. I'll take the Tesla puts. Risk conservative. So I want to see SPY try to seek this low here. So second trade on Tesla. If you did take this, manage accordingly. No close on the 5 above conservative. So there's a second trade on SPY here. So no close on the 5 above that level. Kind of, I front ran this one as well a little bit. So you got a structural breakdown there on Tesla. Stay below VWAP. Okay, that risk coincides closely with VWAP, and I want to see SPY continue to push lower. I want to see the VIX get see some victory above 1945. If you can get a victory above 1945, continue to sell off, that would be very encouraging. If it rejects off 1940, 1945, 1950 territory, all right, then SPY can maybe start to double bottom here, and that could potentially lead to a Tesla stop out. Okay, so in the meantime, we'll see what happens. Small caps, beautiful drop on small caps on the double dip. So the first one gave me a signal. Second one, no signal. Okay, see if Tesla can start to go. SPY continue to make lower lows. Okay, I like that. I like that. Now Tesla, join the party. Join the party, Tesla. Knock out that PML, that yellow line right there. Okay, Tesla just doesn't want to join. It's a little late to the party. Look at SPY, guys. Look at SPY. See if I can drag Tesla lower. Come on, Tesla. Get dragged lower. Just refuses. We'll give it a minute here. Still within our risk. It's very similar to SPY. If you very similar to Amazon yesterday. All right, Amazon yesterday. Amazon. Speaking of Amazon, nice breakdown on Amazon. Decided to go with Amazon yesterday instead of Tesla. Tesla played out beautifully, and decided to go with Tesla today. And Amazon is playing out nicely here. Okay, Tesla into lows a day. If you did take this, manage accordingly. Look at that breakdown. Beautiful breakdown. So we're getting what we want. Okay, we just need Tesla to structurally break down here. Okay, look at SPY. Okay, so this was the compression breakdown. Look at this. Beautiful, 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 beautiful. Beautiful. Amazon breakdown, gorgeous. VIX spiking. Double dip on Walmart. If this breakdown is legit, guys, double dip on Walmart can present opportunity. All right. SPY coming to test that 735 territory. There we go, Tesla. Get into PML. Just a bunch of stubborn buyers. Look how gorgeous Amazon is. Right. Market is doing what it needs to do. Okay. And Tesla's just refusing to go. So this is a key zone right here. We need that to fail. If you did take Tesla, manage accordingly. Up 8. Okay. This might just have to be a scalp. All right. We're going to have to interact with this that PML right here. If you want to be very conservative, you can use that 305 level. Okay, Walmart coming into play. Okay, let's go Tesla. SPY again, once again, SPY for the win. Monster trade on SPY. If you took SPY, congratulations. You're done for the day. All right, so patience, guys. Patience, patience, patience. So I need Tesla to knock out these lows. They did flash 8-9%. I need to knock out these lows. We can get a nice relief pop off that 735 territory. New 5-minute. I would like that 305 on Tesla to fail. I want no buyers to reclaim that level. I don't want the buying pressure to reclaim it. And I want Tesla to go south as soon as possible. Okay, SPY is starting to bounce here. Who took this breakdown? So there's the second leg. All right, so first leg, compression, second leg. Okay, now let's see if Tesla can start to slide. Stubborn buyers. Stay below 735, not 735, 305. 305. Okay. SPY did what we need. SPY did what we needed, but Tesla just refused to go beyond that. So ideally, I don't want to see a close above that 305 on Tesla. See if SPY can retrace. Reject. SPY is now directional, guys. SPY is now trading below prior day's lows. Small caps trading, looking to trade below prior day's lows. The one that gave out that level first was the Dow. If I can get this micro compression break, that would be great. Okay, so what Tesla needs now is us to fail that 735 and go lower. The big danger is, of course, the prior day low sweep. Okay, the prior day low sweep. So they sweep all, they trap all the shorts below prior day low and then drag them all the way back up. So you get the retrace reject there. Inside on the 5s. No change in Tesla. So we did see some green on Tesla. We did see a little bit of drawdown still within that risk. So for Tesla to start to print, we need SPY to do this. And keep in mind, these are zeros on Tesla. Okay, so it needs to start to go here quickly. Okay, if you did TP already, good. Big test coming up for Tesla, 304.21. That has to go successful. That has to be successful. 8%. All right. That pre-market low test has to become successful. If we can pass that, 303.87 is coming up, and that should send us into that double-digit territory. All right, so pre-market low test. See if we can get a nice little slice and dice through that. Pre-market low is notoriously known for buyers being there and trying to drive price higher. Okay, so nothing beyond 8-9%. Five minutes inside. Look how clean Amazon is. All right, this is very reminiscent of the trade that we saw. That I was in yesterday, right? Tesla was clean. I was in Amazon. Amazon took forever. Okay. So ideally, I want no close on the 5 above that 305 cycle level on Tesla. All right, this is a little discouraging because it looks like they want to sweep that level. All right, let's see if we can reject off of it, possibly. But Tesla just refused to go into lows of the day. So this contract is a 0, so this thing needs to start to go. What I want to see is hit lows of the day. I know that PML can cause some issues. I'm okay to sit through that. Okay. But the fact that SPY is looking to push to the upside, that can be a little bit discouraging. So my risk is conservative, very close to that VWAP as well. So a lot of time has passed here. See if SPY can break down. If SPY can break down, that could possibly send Tesla back below 305. That would be a victory. If it can't get below 305, guys, Tesla's probably going to get stopped out. So there was a couple of opportunities on Tesla to TP. High single digit. So I want no close above conservative on the 5. Inside, see what kind of action takes place here. About to get stopped out here on Tesla. If we get that close above that level, I'm stopped out. Flirted with that level there. It's going to be about a 30% stop. So that's 735, 735.21 was critical. How does that 15 look? 15 is trying to go engulfing. So get the close above that red line, I'll get stopped out. If it falls back below 305, potentially back in business. What do we need to take place to help that? We need structural breakdown on SPY. If SPY just reclaims, that's probably going to stop me out on Tesla. Okay. So I was looking for a little bit more on Tesla. I was looking for a little bit more. VWAP is right there as well. So VWAP coincides very closely with my risk. All right. So if we do get that stop out, that's going to mean that VWAP cracks back above, price cracks back above VWAP. Okay. That's basically baked into the risk. Okay. Qs are on the verge of potentially reversing, trying to push back into that 9 EMA. All right, so this bounce, all right, is it a dead cat bounce off this key zone, or is it legitimate to potentially shift the structure? Is it a structure shifting bounce or a dead cat bounce? And don't get SPY today. If you got SPY, small caps, IWM, all present some great opportunities. Tesla, get back below 7305. This is still, I want this breakdown. So as we come back at 305, I want it to flush through 305, Tesla. Okay, flush through 305 with some aggression because a lot of time has passed. Ideally, if SPY can start to break down, that'd be favorable. It probably wants to get back to that 9. Everything's reversing on the 5. The 15s are still inside. Okay, VIX, I want it to stay above 19, get back above 1950. Okay, Tesla has some force behind it. Stay above 1950. VIX bounce off 1950. That could possibly give us what we need here to break down. Okay, now Tesla, come with some force, come with some speed, come with some acceleration. All right, so we did take a trade on Tesla earlier. That worked out beautifully. This is our second trade on Tesla of the day. Okay, so double dip on Tesla. Okay, so Tesla, knock out lows a day. Knock out the lows of the day and continue to accelerate. If you need to TP, guys, if you TP'd already, or you're not dealing with the headache, I need this PML to be taken out. I need this PML to be taken out once and for all. That's the biggest problem here, guys. That pre-market low is the biggest problem. Okay, 15, nice wick back below that 305. Ideally stay below those lows, these lows. That 15-minute low, keep enforcement. SPY is doing what we needed to do, guys. SPY structural breakdown there. Third leg possibly coming up. Third leg. All right, so if you like to trade compressions, all right, 1, 2, okay. And now we need the double bottom to fail. Very similar to what we saw here. So this double bottom is critical because this is a key zone, all right? So this bottom is at a key zone. That needs to break down. Okay, Tesla, let's go Tesla. Let's go Tesla. There we go Tesla. Finally Tesla. Okay, low of the day, up 13, 14, 17, 18. I'm going to take a majority off right there at 24% on Tesla. Runners are going 28. There we go. There we go, Tesla. This is what we waited for. 31, 33. There we go. There we go, guys. Okay. Holding runners here on Tesla. Holding runners here on Tesla. Up 33. SPY falling off a cliff beautifully. Whether you took SPY, whether you took Tesla. Good, good, good. I'm going to have a very tight stop on Tesla, guys. My stop on Tesla, trailing stop 304.49. 304.49. So at least I'll walk away with double digits out of those runners. All right, already TP'd at 24. Up 33, TP if you need to. Close out if you need to. There's a monster trade, guys. We fell below that 735. Up 40% on Tesla. That's how we do a team. I'm moving my stop to test on Tesla at 302.97. 302.97. Very tight stop. Very tight stop. Very tight trailing stop. So at least walk away with 25 to 30. 44, 47%. 48. Let's knock on the door 50. Okay, I'll take 40 right there. All out on Tesla. Gorgeous trade. Okay, good trade. If you want to hold it for some more, by all means, all right? Anything could take place, but I'll take my 40 and call it there on Tesla. So 2 trades on Tesla, double dipped. All right, first one, runners didn't work out. They got stopped out close to break even. Second one, 40+% after 20+% extraction. Okay, so far this week, guys, okay, every trade, okay, has worked in our favor nicely. All right, the emphasis is not to be right every day, but it's just to put ourselves in position. But just the adjustment in the entry model has significantly made a difference. Just being a little more patient has significantly made the difference, and that's intentional. Okay, that's intentional. All right, so if you took Tesla, congratulations. It put you through a lot, all right, but it was worth it. If you took SPY, okay, here, guys, this is some clean action, all right, structural breakdown. If you know, you know. This is colliding with EMAs, right here, structural breakdown, key level, right here. Okay, so if you miss this leg, don't chase down here. Let it get a dead cat bounce and take this slide to the downside. Okay, so it gave us 3 legs. If you missed shockwave, because the entry for shockwave is up here. Okay, indicator, or shockwave indicator, says take the puts here. If you miss here, okay, it's not the end of the world. Look for some structural breakdowns. All right, structural breakdowns, and you can see it taking place. You can see the analysis. Okay, we're providing analysis for you to see this take place. Now, major test once again right here. So structurally, we're making lower highs, lower lows. All right, so as far as our regular trading, that basically is all the trading I'll be doing. Everything else from this point is lottos. All right, that Tesla trade took some time to work out. So again, protect your profits, okay? Protect your profits. Okay, how are we doing, strikers? And that's just on time, just in time for conclusion of first shift. Okay, just in time for the conclusion of first shift. All right, I'm in lotto mode automatically. We'll take more trades later during the day. All right, so if I do take a trade between now and FOMC, it's lottos. All right. How we doing, strikers? How we doing? How we doing? How we doing? I didn't get a chance to check in on the chat. Tesla 40%, trimmed runner for 80, Fidelity having problems. Okay, guys, be careful. Fidelity having problems. 35% item puts. Double dip Tesla 25%. Beautiful job on the double dip. Is the audio down? On what platform, Fido? Not sure what Discord is doing, guys. 2 trades on Tesla stock. Yeah, it's very easy to get stopped out on both of them. One contract, 100%. Beautiful job. Is it on Google Meets? Thumbs up on Google Meets. All right, so Tesla got the job done for us today. Okay, if you took SPY, congratulations. Okay, first shift is in the books. Let us know you're doing first shift. Let's break down Tesla real quick. Okay, this is the tough period. Okay, so when I took Tesla first time, it was right here. This initial drop, okay, nice TP, and got stopped out on the runners. And then the second time I took Tesla was here on this break. On this break here, but I had to sit through a lot of back and forth. You can see I almost got stopped out. Right, my stop was right here. And I did see drawdown upwards of 25%. Right? That was a TP for 8-9% right here, but I opted not to take that TP, okay, because I wanted to see if I can get into scale out. And then in the event I don't opt to take this TP and say it breaks above the stop and it continues to push, I can't then say I should have taken profits. Right, so a lot of traders tend to do that. They say I should have done this, I should have done that, based on how the trade plays out. We don't know how it's going to play out. Right, but even if it stops me out, I'm okay with living with not taking that 8 to 9% right there, because I was looking for that break below pre-market low as a market continues to show weakness. That's what I was looking for. That's exactly what it gave us. And then now tells us you scale out there and then you're out of there. So even if you took this one right here, you got stopped out. This one, if you re-engage, this entry right there is a smooth sailing entry. Okay, so there's Tesla. Both trades came on Tesla. Both trades came on Tesla. So again, we're going to continue to follow this structure as long as the cycle is here. The structure will be here. So if we can break this structure, then we shift the cycle, then something else appears. All right. So during first shift sell-off, we got the 735. We still have that selling pressure present on the hourly. We're seeing buyers trying to come in here, see if it's sufficient to push it lower. So let us know how you did during the first hour of the day, guys. Let us know how you did during the first hour of the day. %. Yeah, I know the action is very frustrating, guys. By no means is it easy. And those stop outs are frustrating, especially if you're in a position and then you get stopped out and then it goes. Okay. So first shift is in the books. Make sure to like the video. Let's get 100 likes, guys. We'll do giveaway 100 likes. We'll do giveaway 100 likes. Okay, so mission accomplished. Okay, but the one thing I want you to take away from our program is there's not a lack of opportunities. Actually, when you do come tune in, when you are part of our team, there's too many opportunities. That's the biggest challenge, right? It's distinguishing the difference between a good opportunity and a great opportunity. We can find lots of good opportunities, but we're at the point where we're looking for great versus good. All right, not looking for any kind of opportunity. Okay, because they're going to come to our table. Okay, those opportunities are going to be brought to our table, brought to our attention every single day. All right. How we doing, guys? Let's get the likes up. We have 140 people in the chat on the check-in, 61 likes. So do me a favor. Let's get the likes up. Anyone take SPY today? If you took SPY, you do well. My small cap army, IWM. Get double dip opportunity on IW. Okay, your trailing stop gets hit here. You can re-engage right there. QQQ. So all the indexes provide an opportunity. QQQ, what we want to see here was that retrace reject. Qs were actually the cleanest one. And what led us, guys, surprisingly, is the Dow. That's why JPM was on watch. Okay, we discuss these things in the pre-market, guys, every single morning. Okay, JPM. We saw that sell-off take place in the Dow in pre-market first. The Dow had the most amount of weakness, and we're starting to see some profit taken on financials. And look at JPM. Okay, JPM actually had the biggest sell-off out of all of them. Okay, JPM fell for about $5. Okay. Crude, see if crude can start to wake up here, get back above 85. We're starting to see Exxon starting to push. Walmart looks like it wants to go, but it just doesn't have enough fuel. Apple did provide an opportunity early. No reclaim taking place. Apple is having a discussion with VWAP. Tesla coming back and retesting that PML. So who's done for the day, guys? 1 hour work day. Who's done for the day? Who's done for the day? And for those of you who did purchase Shockwave, the indicator that's going to bring all these type of setups, give you the entry, give you the exit, give you the stop. All right. If you did purchase it past couple of days, some of you did purchase, guys, make sure to go through the onboarding. Make sure to complete the onboarding and send me your TradingView username to the email. All right. And once you do send me your TradingView username, the reason why I went to Tesla, the premium was high on Tesla as well, right, is because the IV on SPY was high. IV on SPY is increasing. It's at 40 now. So I can get a better bang for my buck on Tesla. Threw down that like on YouTube, waiting for the meeting decision. Account up 8% on SPY puts. Holding one scalp right now. Beautiful job, Sancho. Hope all is well. Done for the day, slightly green. Okay, good. Another day, another loss. Hang in there, Firefly. Who's done for the day? I want to see the done for the days, guys. I want to see the done for the days. All right, so what's happening now, all right, we illustrate this a lot. Okay, what's happening now is you're fighting a battle on two fronts, three fronts now. Okay, when you're a trader, when you're an options trader, okay, I talk about how you have to be right on two things. You have to be right on the direction, okay? You have to be right on the direction, you have to be right on the time. Okay, that's a nice little clock there, okay? So you have to be right on the direction. When you're an options trader, okay? You have to be right on the direction. Any trader have to be right on the direction, okay? But we're gonna, and they have to be right on the time. Okay, so the extent of which you have to be right on the time is directly correlated, okay, with your DTEs. So how much time are you buying? Just because you're buying more time, it doesn't mean you're going to be right. Right? You still have to be right in the direction. So today, on a day like this, so this is the battle every single day, guys. On a typical day. Look at that beautiful breakdown, guys. Retrace, reject, sell-off continues. Okay? So this is as options trader, this is what we're combating. Okay, this is what we're battling with every day. You have to be right in direction, you have to be right on time. If you're right in the direction, wrong on the time, the result should be stop out. It should never be wipe out. It should never be blowing up. If you're right on the time, wrong on the direction, the result should be stop out. Sometimes can you be right on the direction and you're not right on the time and it works in your favor? Sure. But ideally, the big trades are generally when these two things are right. Today, okay, there's a third part of this equation. Okay, you have to be, you're fighting the IV. Okay, volatility. Okay, you're fighting the volatility. So in this case, you're fighting contract prices going higher. So you have to be right on that side as well. Okay, so now there's a battle on three fronts. Because what's happening to those contracts is this. Let's do this. Let's say SPY doesn't move. Okay, let's say SPY just generally stays in a certain area. Okay, SPY generally stays in a certain area, it's chopping around. The contracts are losing value exponentially. Okay, so if it's 0 DTEs, their end of life is the end of the day. They start off expensive during the day at the highest point, and they start to lose value exponentially the closer they get to the end of the day. Okay, the contracts are losing value exponentially. Okay, we know that. This is a usual variable. Today, also what's happening is the IV is starting to increase. So what that simply means, all right, without getting too complicated, this is very simple. The price of the contracts are going up. Okay? The price of the contracts are going up, but the value of the contracts are going down. Price of contracts going up, value of contracts going down. So now the underlying, for you to be right, the underlying has to be going in your desired direction at the specific time. If not, you're losing on both fronts. If you're right, you're going to be very right. If you're wrong, you're going to be very wrong. And you have to be right on, especially on the time. So the entry matters just as much as the setup. Timing the entry or the execution, I would say. The execution matters just as much as the timely execution matters just as much as the setup. So on days like this, okay, the battle is no longer on two fronts. It's on three fronts. Okay, so you have to, on days like this, it's better not to click any buttons or size all the way down. We discussed this with our team early this morning. Okay, but more, hey, you know what? Let me see what kind of, how price moves. Let me do some price study. Let me take some notes. Let me see what the IV looks like. What are the conditions like? Let me do some, let me jump on to paper trading. All right. So there's no shame in paper trading this and trying to put yourself in a sandbox environment to learn and protecting your capital. Okay, so that is what's going on right now. So therefore, that's why I decided to go with SPY. Gave a beautiful move. Okay, beautiful move, gorgeous move. Directionally, if you have the indicator, you're directionally right, and you're right on time as well. Okay, and this thing continues to push lower. So structurally, are we following protocol? Okay, look at this. So if you're trading this, okay, well, you're just following this. You're fading every pop. You don't believe the buyers, all right? So the money is made not on the drop in the puts, but the money is made when the underlying goes up and then drops. Because if you're looking to buy the lows, okay, you're getting stopped out. So this is what you know. This is what is known as a textbook downtrend. And this is clean. This is very clean, team. And the selling now, guys, is getting exaggerated. All right. And then now we have violated. With our team, we discussed this level, guys. 735. If that does not hold, that's where that structural expansion breakdown comes into play. What's going on? That exact thing. And from between where we are and where we need, and the next target, we have a lot of room to run. We have this one pivot down here. Unless we get some kind of shenanigans, all right. If this is just selling, we have room into 732.06, and then eventually 730. Hourly, still a lot of selling. No buyers on the hourly. 4 hour. A lot of selling. 30 minute. Sellers in control. 15 minute. Okay. Buyers are fighting for their life, trying to keep that candle inside or reverse. Hourly. Sellers are in control. Just because sellers are in control doesn't mean you go short at any time. Okay. So in the meantime, as long as the structure continues to hold, more than likely we continue to push lower into that 733, 38 territory. And the VIX has made a spike into that 20, guys. This 20 rejection on the VIX can be the opportunity the bulls can use to at least break structure. Okay, makes sense? If that makes sense, type makes sense in the chat. Right? So those are things that you have to understand as an options trader. That's why people don't like to trade options, because they don't know exactly how it works. They just know calls, puts, and maybe a couple of the Greeks. Okay, you got to know the things that matter the most. Which are those variables, all right? Time and direction. Okay, guys. Any thoughts on SoFi? SoFi did report earnings this morning. Let's take a look at SoFi. Let me refresh this. SoFi. What did SoFi do this morning? Where's their earnings? SoFi did report earnings this morning. SoFi is currently down 9%. Magic number on SoFi is get above 20. All right, SoFi has been stuck in the mud. Okay. Beautiful, beautiful, beautiful. Again, guys, make sure to like the video on YouTube. Let's get the likes up. We did get some news this morning. Continued strike. Retaliation by the U.S., but we're not seeing crude do too much here. Don't touch. So unlike what we were doing this morning, guys, we are directional already. We are directional already. Okay, we're trading below that daily downside breaker. We're trading below this key zone, 735. If there's legit buyers, at least reclaim 735, at least sweep prior day's lows. That would be the structure shifting move. We already swept first shift's lows. Okay, what can they do with that? Right? When a reversal is looking to take place, okay, the objective is not to get all the way there. The objective is to do the analysis here. And if you're a reversal trader, you don't mind being wrong. Right? You don't mind being wrong upwards of 6 times. So you can take 10 reversal trades, okay, and you can be wrong 6 times. But the nature of reversal trading has such a high R multiple that those 6 wrongs will be taken care of with 2 or 3 rights. And then the other 2 or 3 rights, okay, that's what's going to take you over the top. Okay. So reversal trading has a low win rate but a very high R multiple if you're doing it correctly. Anyone else done for the day? Let's get the likes up on YouTube, guys. We're a little light on the likes. Let's get the likes up. Make sure to like the video. Let's get to 100 likes before 11:30. Amazon made a beautiful move. Tesla made a move. See, buyers can try to take this and knock out that 735 territory. Right, so 1, 2, 3, 4. So a breakdown with 4 legs. Leg 1, leg 2, leg 3, leg 4. What more do the bears want? A 9 EMA being put to the test once again. 9 EMA in key zone, very thin key zone being put to the test. Absolutely aviate with Z. Got your DM on Dr. Jones. We can do that. Beautiful job, Marsha. That's how we do it, guys. All right, that's how we do it. I don't see a lot of done for the days. It looks like some of you might still have an appetite for one more. Have an appetite for some more. Okay, so we swept these lows. We're testing this key zone. So it's in the buyer's best interest to use this 20 rejection on the VIX, okay, to try to shift this structure, maybe create a new cycle. They're trying. They are trying. The 15 minutes inside, okay. The 5 minute we went reversal mode. We're testing that 9. All right, do we get another leg lower? We did not still make those higher highs. What a sell-off, guys. What a sell-off here. And it's the best time to be a trader. It's the best time to be a trader. Swing trading is tricky in these conditions. But I promise you, a lot of people have ran away from day trading and options and this and that, guys. But Stick with it, okay? Stick with it. I know it's tricky. I know it's hard. But eventually everything you're doing will pay off. And it will very soon be the best thing you've done. Sticking with it, okay? Stick with it, stick with it, stick with it. God bless you too. Yeah, take your green and run, guys. Remember, we're wrapping up this week. This week is the end of the month. So you want to close this month out as strong as possible. What happened in between, okay, let that stay in between. You want to close out the month as strong as possible. Momentum is a real thing in trading, guys. Momentum is a real thing. Confidence is a real thing. Even if it hasn't been the best month for you, all right, you still want to close on a high note because you can carry over that positive momentum into next month. Okay, momentum is a real thing. That can carry over into the next month. And August should be very, very interesting. Is this the bottom? All right, let's play a game. Is this low, the lowest low of the day, or do we go lower? Okay, type 1 in the chat if you think this is the lowest low, if we hit our low of the day. Or type 2, of course, before. Okay, if we continue to go lower than 733.38. Is this area the low? Is this the low of the day? Or do we go beyond this territory? If you think we go beyond this, type a 2. If you think this is the low of the day, type a 1. Okay, I want you to take a look at the hourly. You don't have to be right. You don't have to take a trade to answer that question. All right, just based on what's taking place, I want to see what the traders think. All right, so the hourly, okay, is still showing some selling. The 5-minute rejected off that 9. We're still seeing synchronized selling across all the major indexes. Let's see who's taking a big hit. Financial sliding. So we got 1 in the chat. That's the low of the day. Two, FOMC will drop it lower. And let's say this before FOMC. Before FOMC. How about that? Before FOMC. Once FOMC is here, anything can take place. Apple might go full circle. VIX 20 is going to be interesting. What really led to this sell-off, guys, is the fact that the Dow was selling off early. Okay, the Dow selling off in pre-market was the read. Because you know, if you were watching all week, the Dow is what carried us up, despite the fact that the Qs were weak. So if the one thing that kept us up starts selling off, and the thing that's been weak the whole time is flat, once the thing that's been weak the whole time starts to break, and the thing that was carrying us starts to slide aggressively, that is what leads to SPY, the bottom of SPY, falling. Okay. 15-minute reversal, 669.17. 669.17 on the Qs. Keep a close eye on that. We went inside on the 15-minute, new 15-minute candle here, new hourly candle here as well. All right. If we get below the lows of the day, that means the selling continues from the hourly perspective. If we want to mount a reversal, we need to get above these highs up here. If we stay inside, indecision. So we have a new hourly, we have a new 30, we have a new 15, we have a new 10, we have a new 5. New everything. Okay. VIX just can't seem to get past that 20. If it knocks out that 20 and continues to accelerate to 20, 29, okay, more than likely SPY puts in a lower day. At 5 minutes still up for grabs. All right, 5 minute 9 EMA test underway. Do we get another? All right, so the bulls need to use this. Okay, just to try to at least get above 735. But if that starts to collapse, synchronized selling takes place. What we've been seeing continues. What we've been seeing continues. So we got a 1 in the chat, we got a 2 in the chat. Okay, if you guys have any chart requests, guys, it's chart request time. Put your chart requests in the chat. I can go over some charts. Make sure to like the video for the giveaway. All right, we're going to be here all day. We're going to have wall-to-wall coverage. Of course, I'm going to take periodic breaks in between. Okay, and see our friends at CNBC will do some of the carrying. They will carry the show at some parts. Okay, but we will have your FOMC coverage. Wall-to-wall coverage for today.
Is still willing to.
Okay. Starting to be a little bit of a structure here. A little bit of structure. A little bit of structure led by the Qs. So let's take a look at the poll real quick. Poll results so far. 43% bearish, 34% bullish, and 23% neutral. Okay, Q just starting to accelerate here. Nice rejection off that 20 on VIX. Apple starting to slide. Where's VWAP? VWAP is all the way. I forgot to put Shockwave 30. Shockwave 30. If you had Shockwave 30, okay, take the puts there. Shockwave 60. That also printed. Okay, Shockwave 60 looks like it just hit exhaustion. So Shockwave 60 possibly about to get stopped out. All right, but you can use that 736 as your risk along with conservative. You see the difference in the sessions, guys. You see the difference. First shift. Okay, nice drop. Second shift. Very tight. Second shift. Okay. Indecision. You can see this hourly candle, bearish. This hourly candle Bearish. This hourly candle, indecisive. Okay, so our motto is when inside, don't decide. Unless you know how to trade the inside candle, don't decide. Okay. All right, we're going to put some pressure here. Put some pressure on that trend line. All right, the bulls are building this nice little sandcastle. All right. See if the bears come and just kick the sandcastle down. Apple, potential breakdown on Apple brewing. So possibly the market ripping can be favorable for Apple breakdown. Take a look at Apple. Apple was the first one to go to the upside. So Apple, that signal came in early. That signal on Apple came in early.
Today, quote, we think the meta compute opportunity is real. The company's strategy to externally monetize computing infrastructure will be a question for management. Now, ahead of earnings, Mark Zuckerberg has come out swinging against Anthropic and OpenAI's what he calls centralization of AI power in the Wall Street Journal and New York Times. Zuckerberg saying he supports more openness. So we're going to have to see how he ties this into his strategy around AI. Carl?
It's going to be a big night. Thank you, Julia, and thanks to Kate Rooney. Let's turn to the Fed this morning. We are expecting a rate decision in less than 3 hours. Expectations are more split than we've seen, some argue, in years. Our next guest thinks we could see a hike today. Joining us this morning, Renaissance Macro Research Head of Economics, Neil Dutta, is with us. Neil, it's great to have you. Appreciate it on such an important day. You guys have been writing quite a bit about, and I think in your words, the dovish case kind of falling apart.
Well, that's right. I mean, Carl, I think, thanks for having me on. I mean, I think it's sort of hiding there in plain sight in the last cut of the minutes from the June meeting. Stable labor market conditions, check. AI-related demand, you just went through a whole segment associated with that. Conflict in the Middle East. We see what's happening with oil. And the president is doing what the president does with respect to tariffs, basically bringing back the effective rate back to where he wants it to be. So, you know, to me, policy is always about trade-offs, right? And it's about trying to understand their reaction function. And if you're the Fed and the hawks, and you basically know that you're probably going to hike by September, I mean, it seems that there's a consensus building for that as it is. Might as well just do it now. And if you're Kevin Warsh, I think the internal politics of the decision and the external politics, frankly, make it prudent for him to do so. I mean, do you want to do it now and sort of exert some control over the decision, or do you want to go into it kicking and screaming in September, potentially looking like a much weaker Fed chair? So that's why I think the balance of risks, I mean, it's a close call. Everyone's saying that. But, you know, this business is about picking your battles with the consensus. So if I had to pick, I would say they just hike.
Right. I mean, you've even thrown a little bit of uptick in wage growth in that list you just mentioned.
Well, labor market conditions are stable. I mean, to me, that's been the big sort of turnaround from where we were about 6 months ago. When you look at the regional manufacturing and services PMI data, it's very clear that there's an uptick in wages that you can detect. And, you know, keep in mind, the unemployment rate is falling, has been falling, right? So, you know, that would argue for somewhat tighter labor market conditions.
Yeah, I mean, you were real out front saying that you think that they'd go in July. I noted the Citadel note today as well, and I do think there's a case there. The case against it, Neil, is do they have to, right? Because core inflation is cooling, and a lot of what you mentioned are external factors like oil, like tariffs. Like I don't think that Warsh is necessarily making the distinction, but there's also a case that they don't have to go.
Well, I mean, I think, to quote Governor Waller, you can't just stare at it with a vexing gaze. But, look at it this way, Sarah. Inflation has been elevated for some time and prices of commodities are surging. I find these trends particularly vexing at a time when global demand growth has slowed. So, you know who that was? That was Kevin Warsh back in 2008. Said that. And the interesting distinction today is that the labor market in the U.S. is in a much stronger place now than it was back then, and he was calling for hikes back then. So, look, and I would also push back a little bit against what you said on core inflation. You had one good month, pretty narrow in scope. The first 5 months, core PC inflation ran twice the Fed's target. It ran over 4%.
Okay. So I think this person thinks there's going to be a hike. We shall see. The odds are it's going to be no change. I'll go with the odds. All right, so the bulls have been building this nice little channel to the upside. Okay, shifting the structure gradually, micro shifts there, small little cycle emerging. And let's see if the bears come and just kick their nice little castle back lower. 50% retrace and view up coincide up here. All right, so this price want to eventually seek this territory up there. Okay, this 50% retrace plus view up exists as long as these lows are intact. Once these lows have been violated, then this now no longer comes into play. It just becomes view up on its own. There we go. Okay, look at this nice little structural breakdown on the 5. It's flagging on the 5. Compression 9 EMA test. VIX, okay. The big thing is for SPY to get to lows a day, VIX is going to need to peek its head back above 20 and go beyond 20. Okay, any rejections off that 20 can push price a little higher or keep it where it is. All right. And I'm playing this breakdown. Anyone playing that breakdown? Dr. Banner from Avengers. The Apple bag of Daily Open. Awesome first year in the books. You learn a ton, Sancho. You're only going to get better from here. Just training is being flexible. You cannot be rigid 100%. Right? You have to be nimble. You can't be rigid. All right. You cannot be a diehard fan. Okay. You cannot be a diehard fan. You cannot be thinking of marrying any positions. Okay. You can't be thinking of all those things. FOMC is 2 o'clock. So decision comes in at 2 o'clock, and then we have the market reacts to the 2 o'clock decision. And what we've been seeing historically is a little before 2 o'clock, we see a little bit of volatility, some shenanigans candle. 2 o'clock, we get the reaction, and after that, we have the press conference. During the press conference, another move takes place. I think structure selling is breaking. Has anyone been with the community for 1+ years? Over a year. 1+ years. For over a year. Has anyone passed the 1-year anniversary mark? If you have, definitely leave a testimonial, guys. Help your fellow traders out there. There's a lot of traders who've been burnt in communities and they despise discords and they think they're all the same. And what we're building is, there's nothing like it, guys. Your testimony will speak louder than my voice. Hourly still inside. So we're jammed between that 735.21 and that 733.38. No big decisions in that area. We might need a shenanigans candle here during second shift to bail either participation group out. right? Spidey senses tell me potential shenanigans candle coming. Over a year for Turbo, over a year for Elian Carlos. So hopefully you guys are making tremendous strides. All right, showing up every day. Most of you show up every single day, guys. And you're implementing the incremental change approach for a long period of time. So you should make exponential leaps from where you were a year ago. Right, from the amount of information you know, from your capability to trade, your confidence, what your setups are, and that's the objective. And then over time, that will be reflected in your P&L. Okay, smash the like button, guys. Let's get the likes up. And more to come. We're here to stay, guys. We're here to stay. Smart action trading is here to stay. Yeah, Shockwave. There's videos on YouTube on Shockwave. There's a couple of videos on my channel. Right, but there is a onboarding process for the ones who do get Shockwave. All right, I'll let you guys know by tomorrow if we're going to do a webinar this weekend. It's been very rainy where I am, and there's been a lot of I missed a lot of the flag football games. They've been canceled for my son, and they're rescheduling some of the games and the practices. So, based on that schedule, there's a good chance, I would say there's about a 65-70% chance that we do Shockwave webinar as of today, this Saturday. All right, by tomorrow you'll know. So every month we shoot for one Shockwave 15 webinar, and in this webinar I'm going to go over the 5, the 15, the 30, the 60, and Shockwave Lotto, along with, of course, Shockwave 15. So make sure to attend that webinar. It's going to be live. It's not going to be pre-recorded. So I'll let you guys know by tomorrow. All right, we'll have certainty by tomorrow with the exact time on Saturday. Right, so no real separation away from this territory. Chop, chop, chop. Chop, chop, chop. Anyone done for the month? Anyone done for the month? Okay, we're seeing some selling take place here. No follow through. MDLZ CEO speaking.
And that has an effect on our volumes. We're now in a stabilized pricing environment with chocolates. So our expectation is once we get through these one-off effects in the second half of the year, we will see volume growth in Europe, and we will reestablish the normal growth that we've been seeing there.
But okay, so we always get a lesson on cocoa prices when we talk to you. So aren't prices coming back up again? And isn't the surplus thought to be not as big as expected? And will that have an impact on pricing for you?
Well, when this whole problem started 2 years ago, there was a market that had no surplus, and demand was quite high. That year, the crop was particularly low, so you had a deficit, and then there was some speculation in the middle, and that caused the whole run-up of the cocoa prices. Today, we are having...
A lot of these companies very soon, the next 10 years, are going to have, I think they're going to, the day of these snacks, guys, I think people are shifting. They're more conscious of what they're eating. So this is their brand. This is their products. Okay, so nothing good. All right, it's a monster behemoth of a company. Sour Patch, Ritz, Oreo. Some of these are European. Okay, it looks like they acquired Cliff. Chips Ahoy. All right, there's a lot of pressure coming in from consumers. And I think that pressure will continue to increase to use cleaner ingredients. It's not in their best interest to use better ingredients. It damages their bottom line. They want to make it faster, cheaper. It's like if you saw the Doritos, right? The Doritos, the naked Doritos. And you are starting to see some snacks not have red 40 anymore as well. Right? And most of the people that consume it are children. I'll be done for the month after Friday. Should be done for the month. Good, good, good. If you're wrapping up for the month, guys, hopefully you guys found tremendous value this month. Regardless of how it went, I believe you've learned something. This is the nature. We're starting to kind of be at the tail end of the summer months. We discussed the importance of how tricky the summer months will be, the amount of chop we'll see, the lack of volume we'll see, the lack of fall through we'll see. Okay, we navigated all of the summer months together. All right, we're on the tail end in August. Okay, and we're almost out of it. Okay, we're almost out of it. So hopefully you evolved as a trader during this period. All right, you evolved as a trader during this period, and then the next summer, the next July that comes around, you'll be in better position to capitalize. So chop, 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 right? So in this case, you can be right directionally. You can be right on this breakdown, or you can be right on this rejection, but timing matters, all right? It's taking time. All right, I can take this trade here, for instance. Okay, say this is my setup. Okay, say this is my setup. So far, it's looking like it's working in my favor, but I'm wrong on the time. And the longer this takes to play out, okay, the closer my stop becomes to these highs, because the percentage will get larger and larger and larger. So now if my initial stop here, say, was for 30% when I initially entered, that 30% stop would probably be here now. right? So it can eventually get to this level, but it has to do it in time, because now the IV's at 41. Okay. Unless you're just scalping. My scalpers, my sniper scalpers, you can make something out of this. So that further illustrates, and the fact that we're inside is very telling. Second shift is about to come to a close in the next 5 minutes. Again, guys, if you haven't already, take a minute, smash the like button. If you're a first-time viewer, let us know where you're joining us from. We're 13 likes away from a giveaway. Okay, we're 13 likes away from a giveaway. We have 5 minutes until the window closes for the giveaway, so make sure to like the video. If you're just joining, we did take 2 trades today. The trade we took today were both on Tesla. Tesla worked out beautifully. Both trades worked out beautifully. Second one took a little longer to play out, eventually played out. And then those runners ran all the way to these lows down here, providing 40, 50 plus percent opportunity and beyond. All right, so 2 trades on Tesla. Outside of that, SPY to present nice opportunity as well. IV a little elevated, so wanted to get a better bang for my buck via Tesla. But regardless, if you took SPY, okay. If you join us for SPY, the breakdown took place. Right here, you take the puts. If you missed the puts, you wait for that nice little flag to form, breakdown again. You say you missed this, okay, key level, breakdown again. Say you missed this, key level, breakdown again. So it gave 1, 2, 3, 4. You could have played the breakdown 4 times, and the 5th time maybe you got stopped out. All right, that's during the first hour. What happens during the first hour stays in the first hour. So once that new shift kicks off, the first thing you want to do is go directly into your journal. Document the trades you took. Jot down why you took those trades, what setups you're looking for, how they played out, how did you manage those trades, and give yourself a quick grade before you move on to take any more trades. DFNS, Fishman. Let's take a look at DFNS. We'll take a look at it on the hourly. DFNS. So that's defense. You got it on a Monday. Nice. So once DFNS broke that 874, okay, playing defense. Nice push into 35. Wow, what a trade. Right there. Nice clean breakout on DFNS. Right, it's testing that 50 MA on the hourly. All right. If we can declare victory above that 50 MA on the hourly, stay above that 30 cycle level, this thing does have some room to continue to push. Okay, potential push into 45. Right, but you have to be mindful, guys. Fishman's entry is here. All right, so if he has runners left, he can sit through that test because the price he paid is down here. Right, your entry is basically determines how comfortable you are in the position. When your entry is very close to where the price is, you're not comfortable. Once it starts to create some separation away from it, you realize some of the profits. Okay, then you start to get a little comfortable and you give it some breathing room, especially if you're right. Because sometimes when a name runs, it just continues to run. So gorgeous breakout on DFNS. Beautiful trade. So you can see this gradual push lower. So even though it's gradually breaking down, guys, the fact that it's taking so much time is really eating the value of those contracts. Okay, new shift here. New shift here. Second shift is in the books. Let us know you did during for second shift. How many trades you took. I've been documenting my hoping it's not a pump and dump. Drones with Israel. 1 and 125 reverse split. Only 1 million shares float now. Yeah, just be mindful of that. Pump and dump. I've been documenting my trades for 30 days straight now. For a month, I'm up. Just have to be more disciplined, cutting losses, taking gains when presented. Stop shooting for home runs. 100%. That's basically what 99.99% of traders. When you start to journal, every trade will come to the same conclusion. Right? When you start to journal, every trader will come to the exact same conclusion. See profit, take profit. Don't be wrong for long. Base hit, base hit, base hit. Right? Eventually the home runs will come. Right? You can make a living without hitting home runs. Right? So tremendous job on doing that, and now just put some frameworks in place on how you're going to control those things. But tremendous job on journaling and finding out about your approach. It takes discipline to journal every day for 30 days. So keep it up and make sure to continue to journal, win, lose, or draw. Okay, what you realize is it's very easy to go back into the lab, start to journal and document things, or look to improve only when you're losing, when things are not going your way. But you're going to have the same approach regardless. Right? You don't want the things you do to be based on results. You want it to be based on, this is my process. I have to go through this regardless if I win, lose, or it's a draw. Okay, that's the emphasis. That's the essence of being a process-oriented trader. All right, a lot of traders love to journal when they're losing, but when they're winning, the last thing they want to see is their journal, because they're riding on the high of euphoria. All right, so keep the process the same, win, lose, or draw. Things you wouldn't accept in a loss, don't accept in a win. Okay, second shift in the books, guys. Still trading inside here. New shift. Second shift, nothing happened. How do we know this? A lot of traders missed that drop. Came into second shift, tried to take those trades. IV spiking. Okay, we saw a 6% increase on IV. Where did SPY go? Nowhere. So chewed up all those profits. $1.87. Okay, that was the range. First shift's range. $6. Okay, let's round this 187 to $2. Okay. So first shift's range was 3x at minimum. Second shift's range. So if you try to duplicate what took place here, right, or you had FOMO here, and you tried to trade here looking for this, right, you gave everything back and some. But if you took trades here based on what's taking place, maybe you can find some scalps, or maybe you find no trades. If you capitalize off of any of these moves or breakdowns, you're done for the day. Okay, so now it's third shift, guys. Third shift, third shift, third shift. Third shift, third shift, third shift. Okay, let's clean up some of these drawings. Okay, the only drawing I'll keep is this LOD because of some of the forecasts you guys provided. Okay, everything else I can delete, boom, and paste. All right. So the question was, some of you said yes, there's a low day. Some of you said no, there's lower lows coming. Okay, and shockwave hour is complete. Don't need my key levels. I have shockwave 60, shockwave 30, but what I do need is the key levels. Okay, rather than saying lower day, we're just going to mark this out as a zone. And mark this out as a zone. So this would be where we're chopping between. Okay, we're stuck in this area. If you want to be a little more specific, you can push it into prior shift highs and that daily downside breaker. You can make 3 zones out of this zone. But this is it. We've basically been stuck in here. Unless we get a breakout or breakdown. Support. Resistance. After this major sell-off. So the market is taking a breather. Let's increase this like that. Boom. All right, so anything in between, unless you're doing support resistance for the contracts, possibly not, there's nothing clean. If you're looking for the expansion, this resistance needs to be flipped to support. If you're looking for the expansion to the downside, it needs to be flipped. Okay, so far we're going sideways. We went down and now we're going sideways. And we have this nice little key zone here as well. So mean reversion setups back to this sticky zone. That's what we got so far. Okay. I'm going to do the end of stream poll here, guys. End of stream poll for our members. The last breakdown was stemming from here. Of course, we had that massive channel to the downside. Back and forth 100%. Over a year for me also. I'm just listening today, busy at work. Good, good, good. As grindy as July has been, I gotta say the month did fly by. As grindy as it's been, the month has flown by. All right, days are long, but the month was short. So I'm done for the day, guys. Outside of lottos at FOMC, maybe a lotto before that. No real major trades. Okay. So this thing eventually breaks down. So you're right from a directional standpoint, okay, like we were saying earlier. But from a time standpoint, every one of those pushes the upside, devalue those contracts. So it's either you have to go further dated, okay, or you just decide to sit through it with less size, or you have to always adjust the approach. You can draw the channel. You talking about this channel here? Right, so you want to avoid drawing channels within a range. All right, so you want to draw channels after an expansion. All right. Alright, so you want to avoid, when you start to draw channels within a range, you're just adding more noise to the chart. Right, so what I mean by that is, say the market pushes to the upside. Okay, if it pushes to the upside and it starts to do this, okay, then you can say, hey, you know what, there's a channel that's emerging. Okay. But if it's within a range, what's going to happen is you're going to see channels everywhere. You're going to see channels here. You're going to see channels the other way. Okay, the hourly is looking to take out those lows. So this on the 5 minute, look at this. All right, so this breakdown on the 5 minute, gorgeous. How long did it take? 5, 10, 15, 20, 25, 30. 35 minutes. Okay, key level, EMA, waves, 35 minutes into lows a day. Okay, be mindful of shorting low a day. All right. If you try to short low a day, guess what? It goes even if it's a dead cat bounce, it goes the other way. So avoid, okay? Pro tip, avoid trading channels within a range. Are we at 100 likes, guys? Are we at 100 likes? I get to 100 likes here. Support, resistance, resistance until proven otherwise. This hourly is directional. Okay, we took out the hourly low. Okay, downtrend is strong. Let's take a quick break here, guys. Again, guys, make sure to like the video. Make sure to subscribe if you haven't already. If you're looking to join our community, make sure to do so. Go to smartactiontrade.com. All the tools and resources are available to you. You can scan the codes on the screen. If you're looking to join our community, use the code TRIAL30. If you're looking to access any of our tools and resources, we do have the starter pack bundle that's available to you. Link is pinned in the chat. All right, let us CNBC get out a commercial break, and then we'll jump right into our first break. And on the other side, we'll do a giveaway. Okay, so this played out nicely, but only took 35 minutes. And you must take profits right there. Okay, because now it's grabbing those lows. And guess what? More than likely, buyers are taking this back up. To where? 735. What's their invalidation marker? Break, just a complete flush and a breakdown. Okay, possibly target that 9 EMA. All right, that's the kind of trading that's required in these kind of conditions. Tit for tat. Okay. You don't take this bounce. If you took that bounce, manage accordingly. Be mindful of that 9. So far, that's up 65 cents in a short period of time. That's a very good scalp. Right, so this probably wants to go from here possibly back to the 9 or to that 735. Once it gets in 735, all right, maybe it gets back lower. Okay, that 9 EMA is right at that level right there, right at that high is at 9. So it can either start to fade here, or it might have just enough to get to 735. Okay. So respect the 9 EMA tests across all the major indexes. Beautiful job, Sancho. Good, good, good. Manage accordingly. So once we get to here, it's up for grabs. Okay, now we have to see what kind of separation we get from this key zone. All right, these are the kind of ideas I look for. So the breakdown to the downside and the break back up. This is textbook support resistance. Because during first shift, this type of trade led to a breakdown. Conditions have changed. We're trading the channel now. So you see how quickly the environment changes, and you have to get used to these environmental changes. Okay, and this starts with being able to identify the conditions as time passes. Okay, so we're starting to fade here. So this gives you more than enough room to TP. Okay, 82 cents. That's close to $50 per contract. All right. We're going to take a quick break here, guys. On the other side, let's get to 100 likes. We'll do our first giveaway. We're at 93 likes. We're going to let CNBC carry us for a little bit. We have your extended stream today, guys, marathon stream today. So make sure to tune in until 2 p.m. We have the rate decision. We have the reaction. And I will share my strategy I'll be looking to deploy during that time to take advantage of the volatility. If you're a first-time viewer, let us know where you're joining from. Long-time viewers, take the next steps, jump in our community, but make sure long-time, first-time viewers, you're subscribed to the channel and you smash the like button. So on the other side, if we're at 100 likes, we will do the giveaway. I'm going to take a quick coffee break here. In the meantime, let's take a listen to our friends at CNBC.
Expectation from what I'm hearing is we will see more of this, and it's going to be case by case, but it is very much a challenge in DC too, as they try to enable the industry to move quickly but not shut it down.
Yeah, it used to be, Kate, that when there was a large hack of any kind, that you would see the security companies, CrowdStrike and Palo Alto in particular, have a bounce. I mean, they're red for the month after all these headlines have been swirling around.
Yep. I think the question still is, are they replaceable, and will the agents be able to do that? But they, a lot of business for cyber. We'll see if they can keep up with the capability of the agents here, but very much a challenge.
Yeah, and as I understand it, they weren't included in the cleanup of this one. It was, they had to use an open source model, Chinese model. Right. Thank you, Kate. Kate Rooney.
Thanks,
After the break, former Minneapolis Fed President Gary Stern with us, his expectations for today's Fed meeting. Plus, after the rate decision, DoubleLine founder and CEO Jeffrey Gundlach will be on Closing Bell to react. That's at 3 p.m. Eastern. We're back in a moment.
Tech Check is sponsored by Comcast Business, powering possibilities.
Companies everywhere bought into AI. Yet most still aren't seeing the return. Billions invested, but nothing's working together, making it hard for people to get work done.
That was not me.
Correct, Nick. Only the ServiceNow AI platform breaks down the walls.
Who are you talking to?
The camera, Nick. Connecting any workflow, any AI, any data source, so everything and everyone finally works together. In every corner of your company.
We can resolve cases across departments and deliver for customers.
We can run HR workflows and improve employee experiences. And with the AI Control Tower, we can finally see and manage all our AI.
ServiceNow is the one platform that lets you connect and control everything so you can put AI to work for your people. Take a seat, Nick. On a chair.
Easiest if everybody just moves down one? No, okay. Okay.
Losing weight with a GLP-1? It's as easy as riding with training wheels. The trick is learning to ride while on them, and that's Noom. GLP-1s kickstart your weight loss. Mindset and habits help you keep it off.
Hey, Rebel, got your favy?
Not today. Get started at Noom.com.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Every day, our customers rely on us to keep their businesses connected, resilient, and running. The best infrastructure is infrastructure that you don't have to think about.
I get my ideas from Mad Money everywhere. I look at everything as a stock. I study it all the time. My viewers are my bosses. You come to my show and you learn how to do stocks.
Mad Money, weeknight 6 Eastern, CNBC, and streaming on CNBC Plus.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original Veridesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier. So whether you're furnishing a whole office or outfitting your home office, Very has everything you need. Our best sellers are on sale at Very.com.
You could spend all night checking every receipt and coding every expense. Or you could let Ramp do it. Close the books without the busy work. Ramp. Love finance.
I like winning on the field, but it's even more fun winning on Deal Dash.
Lori won $2,000 Tiffany earrings for just $1, and Joseph won an iPad for just $6. There's millions of fast auctions. So try today at DealDash.com for $50 of free credit and your first win guaranteed.
Welcome back as we count down to the Fed decision this afternoon. Our next guest does see the potential for rate hikes by year end, but maybe not today. Joining us, former Minneapolis Fed President Gary Stern is with us. Help us get ready for this decision and presser. Gary, welcome back.
Thank you. Good morning.
All right, so what would make this not necessarily a scenario for this afternoon?
Well, I think there'll be a lively discussion at the meeting. Has been already, no doubt, yesterday and today. But I'm betting that the outcome will be no change in rates at this point. And the reason for that is that a lot of what we're seeing in the inflation pressures at the moment are stemming from, non-fundamentals, the turmoil in the Middle East, the on again, off again tariff situation, disruptions to the supply of labor, and so on and so forth. And I think the Fed will, tend to put some of that aside for the time being. On the other hand, the longer pressures go on, the more likely it becomes that rate increases will occur. And we already know that there are more than a handful of members of the Open Market Committee who believe that interest rate increases are appropriate. And they're not likely to change their minds in the next month or two anyway.
I kind of feel like the Powell Fed would have looked through that and sort of gone with that approach, that some of these factors are temporary and you got to look through them and the Fed can't do much about it. But I haven't heard that much from Warsh in some of his public comments and Sintra
I think
Congress.
Chair Warsh.
I mean, inflation is
yes,
inflation. That's what
Chair
people
Warsh
are paying.
I think Chair Warsh wants to, first of all, emphasize his and the committee's commitment to restoring inflation to the Fed's target of 2% per year. And so I think he's a bit hesitant to, emphasize all the offsets that might occur that might make it more difficult or take longer to get back to 2%. I mean, let's keep our eye on the end zone here and not worry about what play we're going to run first and 10 so much. That's one thing. The second thing I think we ought to bear in mind, let's suppose the Fed does achieve its 2% target sometime over the next X months. I don't think that's going to provoke a big celebration among households because price levels matter. It's not just how fast prices are or aren't going up, but what are the levels? And, a lot of levels of the basic necessities of life, whether you look at gas or food or housing, they're elevated relative to 4 or 5 years ago, and they're probably not going to diminish. And I'm not advocating deflation. I'm just suggesting that I wouldn't suggest that there will be a massive celebration,
Still right there,
even if the 2% target is achieved within, the next 6 or 12 months.
Right. Do you think his commitment to no forward guidance can withstand I don't want to call it violent, but a marked market reaction?
Yeah, I think people in the marketplace understand that we're at a point, as far as the Federal Reserve is concerned, where the conventional wisdom may turn out to be correct, but this is a good time to review all that and see what we can learn and see what can be improved. And I think people in the market, at least at the moment, are willing to give Chair Warsh some room to pursue those things. And I think pursuing those things is an excellent idea. If you wind up back pretty much where you started,
Everybody on the desk owns it, so there's a lot at stake. Obviously, today, Bryn, the stock's underperformed. It's the worst of the hyperscalers year to date. Maybe that limits some of the downside, as some are suggesting, because it already hasn't done anything. There are a lot of questions out there. Are they going to raise their CapEx guide? Are they going to maintain their guide on Azure? That's going to be a really interesting dynamic to watch. If they don't sort of lift cloud and they lift spend, stock's probably going to get punished. But how do you see it here?
So first of all, you have, from a momentum perspective, it's below the 200, 50, and 100-day. So it's the opposite of a momentum trade right now. The stock is making lower highs and lower lows. So that is not a good setup. I don't think going into any earnings report of being, let's say, washed out. I think that whereas Google Cloud grew at 85% year over year, albeit it's much smaller than Microsoft, I still think that the jury's out, because ultimately I'm still reflecting on, China clearly owns the open model, okay? And with Kimi spending whatever, we obviously know they're probably distilling, Anthropic, et cetera. Nonetheless, they are crushing it on their open models. I think the question that we're all dealing with is, what the heck are these hyperscalers spending all this money on, and what are the results? Because
Okay. So it looks like I was muted there on YouTube for a second. So we bounced off this initially dead cat bounce. Now we slide under and continue to sell off. And the hourly is directional, guys. The hourly is directional, so we're breaking out of that channel. And looks like we're headed towards that 732.06. 732.06. We're flipping this support to resistance, and it continues to go, guys. Keep a close eye on the VIX and that 20. VIX and that 20 will be critical. So that 9 EMA, so we're still in a downtrend since this morning. So this selling is taking us, now we're about close to 12 points away from 745. 745, you can equate 745 to the FOMC, the heart of last FOMC's meeting. New 5-minute candle here. The selling continues. Wow. Look how quickly things change. 15 continues to shift, continues to dump. Okay. Wow. Anyone in the puts? $732.06 is the only pivot that I have between us and 730. VIX is at 2017. Where's the IV? Can someone take a look at the IV? 45%. That hourly, guys, third straight hour of selling. Third consecutive hour of selling. So I haven't taken any trades since first shift on Tesla. No trades on SPY today. Okay. All the indexes are on the same page. So all of them are trading below the Dow downside breaker. Tesla is looking to test that 300. Amazon was the last one to break down. The Shockwave 60 might have got you in there. Okay, Shockwave 60. Yeah, Shockwave 60 will get you in there. But Shockwave 60, right, I'll lay out the contracts you're going to use for the corresponding shockwaves. So, right, coming up in the next webinar, hopefully this Saturday. And also, I'll update the onboarding documentation as well. Because Shockwave 60, you don't want to use a 0 DTE. All right, you take the puts there, you sit through some drawdown. If you don't want to take that signal, you take it there. Okay, then now it's at scale out. So the selling is continuing. Are there pockets to buy? There's pockets to buy, but every buy is a scalp. Because the past 3 hours, guys, sellers were there. We had 1 hour of indecision, and it finally broke. Tail end of the hour, and then now this is the third straight hour. So unless we get an engulfing candle here on this hourly candle, all right, still has 51 minutes left. It's a young hourly candle, or unless we get a hammer candle, right? That's the only path that the buyers can try to look to overtake this candle. Hammer candle set up for the next hour, or engulfing candle take over the current hour. But as of now, sellers are in control. So how many consecutive hours, guys? So the bigger moves are going to be for the puts. And if you're going against the hourly, you're just looking for those scalps. So 1, 2. So basically from not 8 o'clock. 1, 2, 3, 4, 5. 5 consecutive hours. Intraday 1, 2, 3, 4. All right, because this is top of the hour. So we'll count that 9 o'clock candle. The 4 hour. The 4 hour break takes place, of course. All right. 12 o'clock, we get a new 4 hour candle. That 4 hour candle is continuing that sell. 12 hour has been selling off. Okay. So we're going to June 29th gap. Do you have the levels? I'll put the level in the chart. I don't have the June 29th gap, Elian. Good call, Jake. Right, defense wins championships. There's a lot of traders, a lot of successful traders who don't trade FOMC. All right, they don't want to deal with it. The chart looks clean, but again, you're engaging at a high cost. So don't be deceived. You're engaging at a very high cost. Are we at 100 likes, guys? If we're at 100 likes, we'll do our giveaway. We'll do our giveaway at 100 likes. We are now less than 2 hours away. 2 hours away from FOMC. Okay, let's get to 100, guys. We're 5 likes away. Okay, let's continue to listen to our friends at CNBC.
Like, until Microsoft can make Teams like Zoom and Copilot like Perplexity or Claude, even though Microsoft uses Claude, they can't filter it right. I think Microsoft's going to be in the dog.
Let's go to Meta, which is also down on the year. It's also down big from its high. That is a stock chart that represents questions, right? The volatility of a spend for what? Are they going to have now a cloud business too? I don't know. Weiss?
Yeah, so look, first of all, through all this, I violated one of my personal investing tenets, which is that never get in front of a CapEx cycle. And here I've been in front of the CapEx cycle, on Meta, on Microsoft, and it hasn't worked out particularly well. I mean, I'm not suffering in the stocks, just not performing in them. So that's the first thing. So look, with Meta, I have a lot of faith in Zuckerberg. I do think he is a visionary. I do think he looks long term. I do think he's the best navigator of troubled waters and the quickest to say, you know what, I made a mistake. We saw that time and time again. Going back to mobile, right? Way back, was that almost a decade ago. So I'm comfortable there. It doesn't mean that short term the stock's going to do well. I think there's still challenges, but I do believe
and this is another one we're watching the CDS like with we used to watch talk about every day the Oracles of the world.
Yeah, and I'm not really concerned about CDS. To me, CDS, if you're looking at a Lehman type situation and a Lehman in particular, the risks there.
Well, I don't think we're talking
right. No, we're not. My point is that I don't see the correlation
to where the CDS trades to what's happening with the fundamentals here.
No, not at all. But if nothing else, what we just showed you, the CDS is a representation of where investor concern has risen to. That you might as well have meta investor concern rather than meta 5-year CDS.
Yeah.
Because that is what that chart represents, doesn't it?
Yeah, it's like what the VIX used to do for the market, right? Here's the VIX and, volatility and the market's going down.
But also the CDS is also, there's a huge hedging aspect, which we have to all, that's complicated. I do think what Meta does so well, and I think it's great, right? They're going to start leasing out like Elon did with their data centers, leasing out some of that capacity because it's not being used. What they do so well is their targeted ads on Instagram and Facebook, etc. The Ray-Bans, they're now expanding that. That product is a home run. And it's like, if they were more focused on, I promise you their Instagram, their ads are going to be awesome because that AI is working. But this other aspect where they're spending this money, I think that's where the jury's still out, is what am I getting for all this money? Just focus on what you're amazing at. I think the stock would go much higher.
How about this fact? Outside of Apple, which you listen to all the conversations about what their valuation has risen to. A lot of these valuations for these names are at multi-year lows.
Yeah, Meta I think is a forward of 15 times. Nvidia's
Meta's like 19, Microsoft's 21, Nvidia's 19, Amazon 27, Alphabet 25.
They are certainly on sale when you look at valuation. I think the conversation tonight for Meta is really going to try and pivot towards the cloud and the introduction of the cloud. Let's remember something. Last quarter they beat on earnings, they beat on revenue, stock went down. Why? Market didn't like the CapEx. So they're going to try their best tonight to steer the conversation away from CapEx towards, guess what? We brought on Dave Brown. He led Amazon's cloud business. He's an executive here now. He's going to lead our attempt to lease out our compute. We potentially have a relationship with Anthropic. They're going to try their best.
They can try and steer it away from the CapEx as much as they want. Every analyst question is going to be about CapEx.
Yeah. Can I take a second on the valuation? Do not get, you know I don't like PEs, but do not, viewers, get.
Here we go, leg lower across the board. Selling is accelerating. Look at this, guys. Look at this. Q's falling off a cliff. Everything falling off a cliff. Look at this. That SMH chart, guys, SMH is aggressively selling off. SMH is at that 505. SMH is testing 505. So between us and that 730 is this right here. At 732.06. So every bounce is getting faded. Every bounce is getting faded. Every collision with those waves on the one are getting faded. 90 EMA rejections across the board. IV continues to accelerate. IV is currently now at 47. IV is currently at 47. Anyone have any puts? Any bears in the chat? You take this scalp to the upside, you take profits, you can get away with it. Stopped out on runners possibly. Okay, shockwave 60 comes into play. At some point in time this was support, and now we're out of that channel. We're out of that channel. Walmart finally starting to go. Tesla is testing 300. Wow, Tesla. Out of curiosity, where are those Tesla contracts? Okay, those Tesla contracts are at $2. Our second buy was at 89 cents.
The worst month since 1987. The stock is down 38% this month. Guess what, though? The stock is up still 50% on the year. This is a subsector of the AI trade that went parabolic. We've talked about that. And positioning and sentiment went in the direction of just being extreme. We're working off those extreme conditions right now. If you want to look at the overall market, you can make an argument that as long as oil stays under control, you get the broadening out narrative and it's healthy for the market. I understand that. But at a certain point, when capital moves away as significantly as it has, you can't expect a V-shaped recovery in a lot of these semi-equipment names. So in the case of KLA Corp, the quarter was okay. It wasn't as good as it needed to be when you have such high expectations. I'm looking at it. Revenue, 7% on foundry and logic division. That's not enough. They need to be in high double-digit territory.
Okay. Can we talk about another AI stock? That being Caterpillar. You guys want to go there because it's been treated as Kev's smiling over there, but it's been made an AI stock, hasn't it? The stock's down 25% in the last month. It got downgraded today to neutral at Baird. Target goes to 900 from 1200. What's that a sign? What is that chart a sign of?
I don't think your analogy could have been any better, because if you look at the explosion, it paired an AI trade, and here are the similar sell-off. You sold it steep. Congratulations. I think that was the right call. I think the $900, $1,000 price range is still there for an investment thesis. But if CapEx is peaking, and that doesn't mean it has to roll over or come down, if it's not increasing exponentially, that's why we're seeing all of these things that are cyclical in nature selling off to the extent that they are. So Caterpillar is not a one-trick pony. We're going to hang on to it. But I think the call is correct, and I don't see the stock going back to 1,200 anytime soon. But I think 900 is certainly in the cards.
You think CapEx is peaking? All of the numbers would suggest otherwise. Most of the commentary still thinks, when you ask people, well, where's the third inning, fourth inning?
I don't think it's the third inning. I think it's the seventh inning. I don't think it is peaking to the extent that it won't go higher, because I do think over the next year it will appreciate.
Is this the stretch and we have a song and then we resume the game, or what?
Stand up and take our hats off, because this is the seventh inning stretch. They're going to go a little bit higher, but not exponentially. And then to Steve's point, they're going to come back.
You have Cat.
I do. Yeah, I'm not sure what I make of this note, because within the note they talk about the government restrictions. They mentioned New York State, the moratorium on building out further data centers. I don't know enough about that to
don't hold any.
Okay, so
we'll go elsewhere.
That's not to me the impediment to continuing CapEx. We want to turn to the CDS market. Yeah, that's the impediment because of yields. Put yourself in a precarious position where it's not advantageous to access the debt market. Then you got to pause on the capex. I think the order book for Caterpillar, it needs a reset. I think the entire industrial sector, and you could go to GE Vernova, you could look at Vertiv, same type of.
Let's see if we get that retest of that 9. What's been happening is it's been getting above that 9 and falling back under it. It doesn't really line up with any key level, but the 9 is right there. Well, you need synchronized test of that 9. We're seeing some buyers show up on the 5 right off of that 732.06 level right there. Okay, you can see it came right to 732.06. We're starting to see buyers get a nice push off that level. Okay, buyers trying to push this hourly candle back up. Slightly higher. The Qs are testing the 9. Small caps testing the 9. About to test the 9. The Dow looking to test that 9. So simultaneous test. But look how quickly we got bought off that territory. So even if you took it to the downside, all right, that 732.06, that level stems from, let's go back in time real quick. This is going all the way back to Monday, June 29th lows. Okay, beyond that, if you guys recall, Okay, we had these candles that took place after the close, post market, that bailed us out. Or the glitch candles, if you guys recall. And that's very close to that 5% pullback territory. Okay, so the hourly candle, we're starting to see some buyers to have some impact on the hourly. Look at that. Right off of the June 29th lows. Okay, 5 minutes of buying across the board. See if they can stay above that 9. Okay, we've got above that 9 previously, but we just failed to hold above it. VIX is starting to slide to the downside. We'll put in the 733.38 to the test here. All right, so both groups, both participation groups will get compensated. All right, bears get paid, bulls get paid. We're testing this previous support turned resistance. See if we can stay as resistance. Okay, if we can stay as resistance, we push back below that 732.92. We have a chance of getting back to the lows of the day. If it gets reclaimed, right, we can possibly start to push back at 735. We're seeing some aggression here on that buyout. In this case, you only see the VIX stay below 20. You only see the VIX stay below 20. Major test here. VU up is at 736.99, 737 territory. Major test here. We have first shift's lows also coming up. Surprisingly, there aren't too many inefficiencies on the 5. So this slide to the downside has been relatively efficient. Okay, new 5 here. VWAP's coming up. If you look at 15. VWAP is landing right in the jaws of this key zone. About $1 wide zone. Get a little wide. If you find to make it very tight, you can use that daily downside breaker. Put in the chat, does this send us lower or does this turn to a reclaim? Is that just a sweep and the bulls rally off of this July 29th low? Put in the chat. Bulls are putting some pressure on that hourly, so that hourly still has 32 minutes left. It's about halfway through. Along with this 30-minute candle, let's see if we can at least get a 30-minute reversal first. That 5-minute we reversed already. 15-minute Qs have reversed already. SPY is about to reverse on the 15. Same as the Dow. Dow's about to go engulfing on the 15th if it can knock out 518.35. That hourly still seems some pressure. If we can get a 5 for 5, shooters across the board, 5-minute close, 5-minute break of those lows. Opportunity to the downside can be presented. Gotta take what the market gives us. Made 15% of my portfolio. I'm done for the day. Beautiful job. 1036 is given a lot. The market is given a lot, not for a long time. Right? So being nimble and being flexible and being able to adjust and adapt to the conditions in real time is what's gonna allow us to take profits and make the most of these moves. All right, so no trades for me since first shift, guys. All right, first shift took 2 trades on Tesla. Both worked nicely. We are less than an hour and a half, 2 hours, an hour and a half actually, hour and a half away from FOMC. So they got a nice little dump. All right, did they dump this thing only to pump it back up prior to FOMC? So we're currently above all the 90 MAs across all the indexes. If we fall back under, give a shooter across all 3 the indexes, that might be the sign we fall back lower. We're testing prior shifts lows, and basically the center of the waves coming to the test. That's going to coincide very closely with 735. 734.18 and 735. So if this is legit, you're going to see the VIX continue to go south. If it's legit, you're going to see the VIX continue to go south. Should I buy? I don't know. Should you? If you see something that tells you to buy, buy. If you don't, don't. All right, I cannot give you financial advice. Okay, we're reclaiming that resistance. That was once support. That's once now turned to support once again. VIX aggressively breaking below 20. All right, the buy was right here off this key level. Or the reclaim. All right, so we're still not fully in the clear as far as the EMAs are concerned. All right, so we're still pushing higher. We reversed on the 30 reversal underway. Okay, so the hourly, it looks like the hourly is setting up for a hammer or a potential engulfer. 30-minute reversal underway. 15-minute reversal. 15-minute reversal underway as well. 1 hour. Still fighting for the hour. All right, so that hourly, if that can close out as a hammer, that tells us that the hourly buyers, there's buyers on the hourly that impact the hourly. Let's see where that 9 is. Let's fix it right there. Okay, that's where that 9 is. So we'll just put this as a test. Notice how that coincides close to that 733.38. If it falls below there and all the major indexes start to sell off once again on the 5, VIX gets back to 20, we can start to slide back lower. Let that 5-minute candle close. That's 2 minutes left. If that 5-minute candle knocks out the lows of that previous 5-minute candle, will be a bearish engulfing in the next 2 minutes. Fail 2 up underway. Yeah, Amazon, nice bounce on Amazon off TP1. Okay. So critical inflection point here. If the buyers can hold this, we have a chance to get back to 735 and possibly VWAP. If they fail this, there's a possibility we get back to lows a day. So now we need separation. What are we thinking, team? What are we thinking, guys? Chat on YouTube. What are we thinking, chat? What are you guys thinking? We continue to push to 735, or we drop back lower into 732.06 and pay these lows a visit. Let that 5-minute candle close out. Okay, we're starting to push back lower. IW on the verge of going engulfing on the 5 in the next 17 seconds. If we break back below 730, 733.20, 733.30, I should say. 39. It can start to slide here. So IWM did go engulfing back to downside, guys. IWM engulfing count on the 5 back to downside. IWM. See, there's some follow through behind it across all of them. Buyers are trying. So a nightmare scenario for the buyers is this hourly candle gets back below 733.04. Okay, so this was just a nice little trap. Okay, if the buyers can keep this above 733.04, they have a chance during the next hour to try to take this into a 2 down, 2 up reversal. Okay, if they can't, right, this was a nice push up. I mean, this is more than enough for the bull, more than enough room for the bulls to TP in a market trending to the downside, $2.60. Okay. It's 5 for 5. If you know, you know. Wait for that 5 to close. Get a break below that 5-minute candle's lows. Your risk is either that 5-minute open, 5-minute high. Prior 5-minute open and 5-minute high. And now we're starting to slide. The selling is going to look like it wants to continue. And IV now is at 50%, guys. IV is at 50%. Okay. IV is at 50%. IV is at 50% on SPY. And you don't take that push to the upside or slide to the downside. You'll notice how this coincides beautifully with second shift lows. We bounce there, we come back, we fall back under it, and we reject our first shift low as well. Okay, the tricky part is creating a separation away from this territory, because now this zone here closely represents the 20 on the VIX. So you can see some back and forth here. They're not going down easy. All right, the closer we get to 1 o'clock, I would anticipate, guys, I can potentially forecast the IV getting upwards of 60%. Okay, by the time the FOMC is here, IV getting above 60% is a possibility. Okay. All right, VIX hugging that 20. SPY hugging this zone right there. Let's continue to listen to our friends at CNBC here, guys.
Can be clearing events within 2 hours' time, that we've sort of done enough to get worried about these things. No matter how they break, maybe we can have an attempt at relief. That being said, I've always been a skeptic of broadening is salvation for the market, and I'm surprised that the semis are down 25% in like 4 weeks or 5 weeks, and the S&P's within a couple percent of its all-time highs. I give credit for that, but the weakness in banks today is a little bit of a different story. So I think that is all about, the Fed, kind of the what-if trade about what might happen with that decision today.
What are you thinking about the Fed and what may happen later? The biggest intrigue, not really about what they're going to do on rates today, but almost everything else on the menu.
Well, I think there's actually more intrigue about the rate decision than you would ever expect to see a few hours ahead of time. 1/3 chance is pretty high. I still don't necessarily think the logic team gets them to a hike. If you look at where things were in June, oil's really not any higher and it went much lower in the interim. You had better CPI print, so it doesn't really follow that they would move today. It would be a gesture. It would be a let's get it over with type of a movement establishing. By the way, almost all Fed shares have hiked, aside from Janet Yellen, within like 2 months of when they got there, because that seemed to be the thing to do. So I don't think they're going to do that. I think it's much more about the market wanting to have some way to get its arms around what decision-making process is down the line. Mm-hmm. Obviously, if Jackson Hole before the next meeting, there's a lot that we're going to have to process. But bottom line is, if Warsh thinks that the market's been too dependent on the Fed and the Fed has calmed Wall Street at the expense of Main Street, he wants a more volatile market, maybe that doesn't, appreciate quite as quickly. I don't know. That seems to be the what you might get here in the short term.
I think the market's probably one of little rules of the road just to understand what it's going to be like in the meetings and years ahead. Michael, we'll see you this afternoon. Thank you, Mike Santoli. Calls of the day next.
They told us that the sky was the limit. It brings exciting accountability. But you need to know that.
All right, another slide. Looks like it wants to slide here again. VIX peeking back above 20. VIX peeking back above 20. VIX peeking back above 20, just like that. So you get some nice follow through. All the indexes sliding. Failed to hold that 9 MA. Reject our first shift's lows. That hourly candle seeing some pressure. 30-minute. Okay. Getting pushed back lower. Trap on the 30. Failed to up. I'm in the 338 0 DTEs. I was looking at it. Yeah, those zeros in this time will be flying. Will be moving so fast, per usual. Especially now with the IV continue to accelerate. IV's at 51, guys. So it looks like this level's coming up next. This slide into this level's coming up. I do have a giant inefficiency there on the 5. Right beneath us. See if you can crack below it. On SPY. And we can get that crack below it. That'd be great. 15-minute. Selling pressure across all the indexes. Small caps taking the biggest hit. Small caps are the closest to the lows of the day. Small caps are the closest to the lows of the day. The best bet for this is the bulls' chance here, guys. This is their last chance. Okay, this might be a 50. All right, 50% downward compression. Comes to these prior highs. So this is the time they need to push this thing higher. If not, that slide comes in. We're at the new 15-minute candle here. New 15-minute candle here. Let's see if all the 5s can get in synchrony. All these yellow candles need to go red for it to continue. Inside on the 5. Things are starting to intensify. The closer we get to FOMC. At 1 o'clock, I will take a break. Okay, I will take a lunch break. And then we will reconvene after the break for the reaction to the decision. We're going to watch the decision in real time. We'll have the press conference for you, so make sure you stay tuned, guys. Make sure you like the video. Make sure you subscribe. Make sure you share with all your trader friends. And we will be taking some trades during FOMC. Those are lotto trades, all right? So we already did our trade. We did a majority of our work early on. Tesla got that job done for us. 2 beautiful trades on Tesla. If you did miss that, rewind the stream all the way to the beginning. Okay, so that trade played out beautifully. SPY also played out beautifully if you took SPY. So a lot of great opportunities. Conditions were a little simpler, not easier, simpler to read during first. The fact that the VIX can't create that separation, SPY can't create separation away from that zone. Anyone trading FOMC? Anyone trading FOMC, let us know in the chat. If you're not, That's good. If you are, make sure it's very little size. Okay, we are eligible for a giveaway, so we will do a giveaway before our break, okay? We will do a giveaway before our break. So what I want you to do, okay, by when this week is done, I want you to go back and watch last week's episodes. All right, we're getting stopped out when the execution wasn't as clean, especially Monday and Tuesday. I want you to go back and watch Mondays and Tuesdays episodes. All right, getting stopped out multiple times, very, very frustrating. Of course, we did bounce back tail end of the week, Wednesday, Thursday, Friday, but especially those 2 days. Okay, you can learn a lot more from the things we did right during those days than you can from the things we did right when we were winning. All right, there's more things for you to extract from those episodes than there are from the episodes this week. Okay, the episodes this week, everything's been working in our favor. Right? The probability can go either way. We have high probability setups, but the one thing I do like is the cleanup in the execution. Right? A little more patient. Execution, clean up a little bit. And it's paying its dividend. Okay, so I want you to see what didn't change is what the market was doing. Right? It was what my approach was. Not the strategy itself, but the way I'm going to implement the strategy, the way I'm going to deploy the strategy, the way I'm going to modify the entry model. Okay, we talked through it in real time last week, which entry models work, the 2 entry models that work best during these conditions, and the one that doesn't work as well. Okay, so we come to that 50, we get that higher low, VIX back below 20, we need separation away from it. Okay. That hourly, buyers are trying to step back in here. They need to drive this thing beyond these highs and never come back and visit the 733.38. Okay. Because the buyers have a lot of work cut out for them. That daily open is all the way up here. VWAP is there. We came into June 29th lows. Only one says 20-25%, around the 21 EMA on 3 minutes. Beautiful, beautiful, beautiful. Good, good, good. Should I buy? Okay, we saw that comment already. Okay, in the next 8 minutes, we have a new hourly candle coming. And we are seeing the presence of buyers on this hourly now. During this hour, we are seeing more buyers and sellers at 12 o'clock. There have been more buyers and sellers. Let that candle close during this hour. So is that going to continue? If it is, we have room back to 735 territory. How do we know it is? When we break above that level and continue to expand. If it's not, break below these lows. If it's indecisive, stay within the range. And let's make that run into 735 before that hourly candle closes. Okay, see if we can make that run into that potential push into view up for 735 before 1 o'clock. And that'll put us 1 hour away from the decision. We don't need new bars. Short covering will do. Okay, nice break there. Okay, so very similar to what was going on here, but this one is cleaner. We're starting to see a new cycle form. Okay. Off of what level though? Off of our 732.06. Precisely. Okay, guys, put your names in the chat for the giveaway. All right, we will run the giveaway here, and then we will run the giveaway. I'll put the clock for the giveaway for about 20 minutes, and there will be a race. All right, so put your chats on YouTube for the giveaway. This is giveaway number 1. Okay, giveaway number 1. We did exceed 100 like threshold. Let's get to 150. We'll do another giveaway. All right, we're gonna have your wall-to-wall coverage today. All right, we got you from the open all the way to the close. If we get some momentum on the stream, we get more likes. We'll go overtime possibly and get the coverage of the earnings. All right, that's going to require a lot, but we'll see. We'll see how it goes. We'll see how we're feeling. All right, so names in the chat, guys. Giveaway, giveaway, giveaway. In the meantime, let's enjoy some SAT tunes. Okay, I'll be collecting the names for the next 5 minutes. All right. 5 minutes on the clock to be eligible for the giveaway. Five minutes on the clock. Now, winners, our members, coaching call or boot camp ticket, folks on YouTube, course. Okay. You get access to our day trading course. Can I make this smaller? It looks like I can't make it smaller. Okay. So 5 minutes here on the clock for the giveaway. All right. So I'll be collecting the names in the next 5 minutes. Okay. So put your names in the chat on Discord, on YouTube, and Google Meets.
Smart action trading is my striker. Stay the course, stay the course. The fruit don't grow the day you plant the seed. Stay the course. The market can bless you, the market can humble you. Stay the course.
Green candles dancing, got the whole room alive. 3 wins in a row, got me feeling like I can fly. But I've seen euphoria turn a blessing to a curse. With confidence, I rush discipline, things get worse. When the streets whisper, you don't need the rules today. That's the same voice that slowly pulls the wise astray. The market don't care about the wins from last week. It rewards preparation, not the highs that we see. seek smart action trading. That's why strikers on the spoon, learning how to stay grounded when the day turn green. Because the danger ain't the losses everybody fears. Sometimes it's success that blinds your eyes and clouds your ears. I used to chase results, now I focus on execution. Because consistency is built through process, not emotion. Every chart a classroom, every candle got a lesson. Every session starts reminding me to stay invested in progression.
Back to the process, back to the way, back to the habits that carry the day. Green days come, green days go. Wisdom decides what remains when they go. Back to the process, back to the plan. Forever a student, that's who I am.
I remember empty rooms and talking to myself, building brick by brick when nobody else helped. Now the numbers look better, the lessons got larger, but success can become an even tougher teacher. Because pride grows quietly, it don't knock at the door, but slips into winning streaks and starts asking for more. Proverbs on the desk, coffee by the screen, reminding me humility is stronger than it seems. The fool says,
I'm thinking it out.
I arrived. The wise man keeps learning, keeps the curiosity alive. Every loss paid tuition, every win paid rent. Both of them teachers, if you listen to what they meant. The crowd lost prediction. I respect preparation because tomorrow's opportunity belongs to dedication.
Back to the process, back to the way, back to the habits that carry the day. Green days come, green days go. Wisdom decides what remains when they go. Back to the process, back to the plan. Forever a student, that's who I am. Lord, if the blessings grow, don't let the roots go shallow. If the winds keep coming, keep my spirit walking narrow. Let the door swing open, keep my heart in place. Let gratitude grow deeper than the prophets that I chase. Because euphoria fades, but wisdom remains.
Cabinet is revealed.
When success starts to reign,
The answer is slain before the winner arrives. Preparation keeps her
vision alive.
small steps repeated become stories we told. That's how ordinary days become silver and gold.
Some chase the spotlight, some chase applause. I'm chasing consistency, I'm under the call. Some action trading, SPS starting to stand strong.
Teaching traders discipline long after the trends are gone.
The market will change, seasons will turn, but every cycle leaves another lesson
So
learned.
when the green days come, I enjoy them with grace and show up tomorrow and return to my place.
Say no more. Back to the process, back to the way, back to the habits that carry the day. Green days come, green days go. Wisdom decides what remains when they go. Back to the process, back to the plan. Forever a student, that's who I am. Smart action trading, stay the course, plant the seed, trust the word, stay the course, ever learning, ever growing. Smart action trading, stay the course, ever striker, stay the course, stay the course.
Hold on through the valley.
You gon' make it.
Yeah, mama used to ask me why I stayed up so late. Staring at the candles like they losing my faith. Laptop light glowing all across the room. Trying to make a way before the rain come through. Had dreams bigger than the town I was in. But pressure make it hard just to trust within. Everybody see the wins on the green days. Nobody see the tears on the red days. Nobody see the losses I was hiding inside. All the nights I questioned God in my whole life. Would've quit 100 times if it wasn't for faith. David had valleys before giants got slayed. And they
Okay, so I got all the names on YouTube until Ryan, all the names on YouTube and Google Meets till Lily, and all the names on Discord until Moises. Okay, and Spy is at 7:35, headed back towards VWAP. So unless we have any last entries, guys, we're going to do the giveaway here. Okay, we are going to do the giveaway here. Before we do the giveaway, guys, if you do win, all right, make sure to be in the free tier Discord. Okay, what you're going to do, the instructions to claim your prize, if you are on YouTube and you're not a member, if you're not in our community, is, all right, join the free tier Discord. Okay, join the free tier Discord. No payment information needed, just the email. All right, and then send me a DM when you win. I'll give you the exact code word to send me a DM. Okay, send me a DM when you win. Okay, in the free tier Discord, you have 24 hours to claim your prize. All right, for our members, of course, you want to just send me a DM directly with code word. All right, SPIES at 735. Any last entries? Okay, we got Turbo. So the giveaway is bootcamp ticket for our members or coaching call, a free coaching session to use whenever you need it. And for the folks on YouTube, okay, it's going to be the Get Start Day Trading course. I got you, Judith and Turbo. Anyone else? Anyone else on YouTube? I know there's a 30-second delay on YouTube. I got you, Green Queen. Got you, V. Ryan is the last one going once. Look at that collapse on the 20 on the VIX. Okay, so look at this. Mounting reverse on the hourly. Okay, so we've officially reversed on the hourly. Boom, buyers are here. Back to view up we go. Just like that. We got ETN. If I'm pronouncing that right. Okay, anyone else, guys? Anyone else? Anyone else? Anyone else? We will do another giveaway. We'll do another giveaway. We will do another giveaway. If we get 150 likes between now and after the rate decision, maybe 2:30, we will do another giveaway at 150 likes. Okay, the first one is in. We're going to set this to, we're going to take a 20-minute break, okay? We're going to set this to 20 minutes. All right, 20-minute break. We're going to have CNBC carry it in the meantime. Okay, names are in. Let's turn this off. Let's turn this off. And I will take a quick lunch break as well. Okay. Knock out some push-ups. Do some body squats if you've been sitting this entire time. Okay, stretch out. All right. I know trading, the nature of our profession is we have to be very sedentary. So when you get those moments to move around a little bit, make sure to do so. And now let's start. All right, so 20 minutes. There'll be a winner, and I'll be back in 20 minutes. All right.
Ale and stuff like that. The statement before Warsh took a whack to it was full of vestigial statements that had been put into the statement before to buy off this descent and that descent. So we're starting anew. I think Warsh wants to keep it clean. He said he liked it to be simple and straightforward, but you're right in the sense that there's going to be a debate around the table. Sometimes you buy off the dissent with a statement, and sometimes, by the way, the statement is what the Fed wants. They may want to give us a little hint if they don't hike. Remember, it's really interesting.
Testing view up at 1 o'clock. I will be back.
80% probability, I believe, of a hike in September. That was the Citadel quote there saying, hey, if you're all agreed you're going to do it in September, you might as well do it now because the market is priced for it. There's also, by the way, guys, a second hike built in already into the futures market. And one other thing, if you don't mind, that I'm watching today is, okay, we know people are putting a few chips and hedging inside the Fed funds market. But how much are they hedging inside the Treasury market? And is there a hedging going on in equities? If we don't get a hike, do equities perhaps turn around because they were expecting a hike? Or the other side, if we do get the hike, is the market not priced for that? So we're watching not just the futures market, but all the markets. And one of the takeaways we'll get from this is Warsh running a better railroad, or was the way it was run before a better way to do it? In other words, not telling us what's going to happen or telegraphing it. Some of the market volatility we'll get today will give us a clue on that.
Yeah, we got about an hour to think about it, and then longer than that to react to it. Steve Leisman, thank you very much. All right, so let's cut to it and go straight to the White House. And your first guest to kick off the special 2-hour coverage, National Economic Council Director Kevin Hassett, joining us now in a first on CNBC interview. Kevin, it's great to have you on to kick off the coverage. I learned something today. I learned what a vestigial bone is. So I guess my question to you
your appendix is a vestigial organ as well. But anyway.
Or pinky perhaps, or apparently the tail that I possess. Either way, Kevin, are thoughts of a rate hike a vestigial bone in the market? Should we put those to rest?
You know, I think that President Trump and the entire economic team have a super high regard for the stewardship of Kevin Warsh at the Fed, and we expect him to do the right thing, which is be an independent Fed that looks at the data, looks at the best models, and then makes the best judgment that he can. That we trust his judgment. That's why he's been appointed to the Fed, and we look forward to seeing how he moves forward. I can say there have been so many positive developments that he's brought in all these outside advisors that are going to reevaluate the Fed models and so on. And so I think that his stewardship at the Fed is already a home run. And this meeting, we'll see how it goes. But the fact is that our confidence in Kevin Warsh could never be higher.
Kevin, it's Kelly here. One of the economists I was reading has just suggested of all the task forces that Warsh is creating, there's not one to deal with the following possibility, which is a U.S. debt downgrade. The fiscal deficit situation, not great, worse than last year. Debt to GDP, not great, historical bads. What would you say about that? Is that something that the Fed has to react to? Is that partly why we're in the situation that we're in?
I don't think that any of us think there's any reason at all why U.S. debt should be downgraded. That if you look at for example, the reductions in government employment that we've enacted over the last year and a half, maybe 300,000 jobs down, that means that the long-run budget situation is moving in the positive direction, not the negative direction. So I think the Fed probably, if they were really worried about it, they might have had a task force on that. But the fact is that they look ahead and think about what are the problems that the Fed will face, and I think they've got a heck of a really great set of people there thinking about it, people who I've known throughout my career. And if I were setting up a task force, I'd have chosen the same people.
The CPI number, consumer price index, the inflation reading effectively, that's been coming down the last few months. But you also know, Kevin, very well, that is backdated. Not only looks back a month, but it's also at the same time dealing with data and inflationary points that we may have gotten a few months ago. Are you making precautions or anything like that in the event that oil prices remain higher for longer? How are you and your team thinking about the chance, a very real chance, that those inflationary inputs may be a little more than we think this summer?
Well, if you look at the futures markets, they expect oil prices, which have blipped up in the last few days, to drop sharply over the next few months. And the thing, though, when I look at the CPI, which is one of the better CPI, Consumer Price Index reports that I've seen in a long, long time, if you look outside of energy, if you look at the bones of the CPI report, you can see that our policies are having a really big positive effect on reducing inflation. And so, for example, drug prices are way down and things like that. And so the bones of the last CPI weren't really related to energy at all. And we think that's because of the dereg policies, the drug policies, the Trump RX. All of those things are showing up in the data and will continue to. And so that's why I think that anyone who looks at the latest CPI would have to say you got to be really bullish on the Fed's ability to control inflation, because basically they're working in tandem with the White House to lower costs for everybody.
Where do you come down, Kevin, on this whole thing about how AI companies might be driving up interest rates or affecting demand levels in the economy? What do you make of these levels of real interest rates?
Right. Well, I think that the number one story for AI is it's a big driver of growth right now. And, there's a capital spending boom, unlike anything that we've really seen since the mid-1990s. And that's feeding through to higher wages. Real wages are up about $3,000 on average since President Trump took office, after declining by about the same amount under Joe Biden. And the real reason why real wages are up is that we're getting a productivity boom, both from AI and from other factors. And so when there's a productivity boom and real wages are going up, it's very, very positive for the economy. It means that consumptions can stay high along with investment. And the productivity boom from AI is also a reason why we expect downward pressure on prices, because when productivity goes up, that's the kind of growth that doesn't cause Phillips curve effects and make the Fed have to react.
Yeah, and this is critical. So go into that a little bit more. Inflation, we always define it, or tend to define it always, as like a bad word. It's a naughty thing. Inflation itself, things cost more. Everything's inflationary long term. What is the difference, Kevin, right now between wage growth and inflation as you see it? Something costs $5 more, but you make $6 an hour more. You actually turn out better. How do you see the economy vis-a-vis wage inflation right now?
Right. Well, what's going on is that real wage growth is the amount of money you have in your pockets. It's been skyrocketing. It's been skyrocketing on an average, and an enormous amount for manufacturing workers, for construction workers, and so on. And so the bottom line is that inflation is dropping quickly because of our policies, and then the wage growth that's coming from higher productivity because of AI is making it so that people are much, much better off. And don't forget that they lost ground under Joe Biden year after year after year because of the runaway inflation. And so with inflation going down, it's much easier for real wages to go up. And they went up about $6,000.
Kevin, you know that's a lot of that inflation was caused by COVID and supply chain disruptions.
I think if you go back and look, what happened was that there was a massive stimulus passed by the Democrats right after Joe Biden took office, after the COVID emergency was mostly behind us. And you could go back and look at me when I was a private citizen on the record saying this is going to cause inflation. I think May after that bill, I predicted something like about 7% inflation that year. And so when the federal government drops cash into the economy, helicopter drops cash into the economy, then the inflationary effects are really easy to see. Now, instead, when we were there managing COVID under President Trump, then we did 5, I think, very targeted stimulus bills to make it so that the hole that was being dug by the shutdowns was refilled, but just the right amount. And so for the year, after a minus 32% quarter, we had flat GDP for the year, and inflation was in the ones. And so it's really the big runaway stimulus after Joe Biden took office that caused this inflation.
NEC Director Kevin Hassett joining us from the White House. Kevin, it's a real pleasure to have you on CNBC again.
Thanks.
Thank you.
Yep. Thank you.
Let's now bring in our first all-star panel. Jason Trennert is chairman and CEO of Baird Strategas. He's here on set with us. And former Federal Reserve Vice Chair and CNBC contributor Roger Ferguson joins us as well. Jason, I'll just start with you. Anything in what Director Hassett said that you want to respond to, correct, build on?
Well, the one thing I might correct a little bit is that there's still a significant affordability issue for people. We have something called the common man CPI, which is reverse core, because I think...
Reverse core. In other words, it takes food and energy as the...
Well, it's to us, that's pretty core.
Yeah.
Right. So we just include the things people have to buy, and we exclude the things people don't have to buy. And right now, if you look at that, people are about 6 or 7% poorer in terms of their purchasing power than they were 6 or 7 years ago. Now, that's not President Trump's fault. I mean, there's a variety of reasons why that happened. By the same token, you get the person...
A couple trillion in stimulus have something to do with it?
Well, the person in charge gets the blame. And the fact also is that the Fed's balance sheet has went to $9.5 trillion during COVID. Now it's $6.5 trillion. But I think one of the things Warsh is focusing on is that the Fed should not be an active player in the game. It should not have a jersey on. If it has a jersey on, it should be a referee's jersey. And I think since QE started in 2008, 2009, an enormous amount of negative consequences have accrued to that, not the least of which is it's massively regressive. It's great for rich people that have private equity portfolios and venture capital.
So you think
if you're just a saver, you get kneecapped.
Because you think they're driving up asset prices because of the balance sheet?
Well, I think that was the plan. That's part of, certainly that was Bernanke's plan. And when people said, like Senator Toomey, what do you say to the person in my state that did all the right things, saved money, took the kids to Hershey Park instead of Disney World and all the rest of it? He said, well, they just need to take more risk. Now, that's great in the faculty lounge, but if you're just a regular person and you don't even know how to take more risk. You're doing the right thing by saving, and you start getting zero.
Do you think he would do something today to shrink the balance sheet or move more aggressive? Because a lot of people will now say, even those who acknowledge it might have had some impact, that we're back at about 20% of GDP levels, meaning it's kind of a neutral.
Yeah, I don't think it's a neutral because, frankly, if you looked at the growth in the balance sheet, it was about 6.5%, a little more than nominal GDP growth from, let's say, 1990 through 2007. Since then, it's been 11%. And you're wearing a jersey at that point. And you look at Silicon Valley Bank as another example where people are expecting always and everywhere for the Fed to bail them out. And in my opinion, that's not what it was designed for.
So, Roger, we have about 44 minutes until we hear from the Fed itself. In your view, what is more important? Is it the rate decision, or is it the balance sheet move, or is it something else?
Look, I think the rate decision over time is certainly going to be much more important. There's no doubt that they need to shrink the balance sheet, but I think that will end up being a relatively slow and methodical move, nothing very dramatic. On the other hand, I think they're also going to have to confront what they said in the last statement, which is that the Fed has missed the inflation target for roughly 5 years. new Chair Warsh has come in, guns are blazing, so to speak, at least verbally. And I think at some point the question will be, when does he act? I think the markets are expecting 2 hikes this year. I think that's quite reasonable. So let's see what he says this time around and what the rationale is.
Do you think we'll get 2 interest rate hikes this year?
I think it certainly should be discussed. I think the market is expecting it. Steve Leisman, I think, indicated that that's the way he's also reading the market. So, yes, I don't think we should be very surprised if we end up having, 2 hikes this year at some point. And if not, 2 this year, 1 this year, maybe 1 very, very early next year. But it seems to me the direction of travel has got to be towards, tighter monetary policy in order to back up the statements that the FOMC has made about getting back to the 2% target.
Jason, what's your point of view on the hike versus cut versus hold?
We're of the view a little bit that the market is misinterpreting perhaps Warsh's statements or perhaps too hawkishly, or they're interpreting them too hawkishly. And that's partly because at RSHAP we know Chairman Warsh a bit, I'm sure as Mr. Ferguson does, but it's important to remember he's a dyed-in-the-wool supply sider, which means that he's not a Phillips curve person that sees there as a strong relationship necessarily between growth and inflation, there is no such thing as overheating if the spending is happening from productive sources. So our view is that he's going to let inflation run a little hotter with the expectation that productivity is really going to come through from all of these CapEx investments in this CapEx cycle. Now, he also knows that it's not particularly wise for a central bank to tighten into a supply shock like energy. But at a certain point, as Brian will remind us, at a certain point, the supply shock becomes a permanent state of affairs. And I don't think you have a lot more time on that. If oil prices are this high in a couple months, it's going to be hard for the Fed, in my opinion.
But that doesn't make any sense to me. Even if they were to stay at those high levels, either it will slow the economy or it's a one-time shock. It's not going to keep accelerating.
Yeah, I just think the political pressure within the Fed will be such that it will be hard for him not to do something. I think we have to get ready, and I would love to ask Mr. Ferguson.
Well, we're on live TV.
Yeah.
Jason, you can do whatever you want. We can't stop you.
I'll do it. But I would like to ask him whether we should get ready for more, perhaps, split votes from, like Bank of England, to my knowledge, they have split votes all the time. And it doesn't seem to cause that much consternation. Here, we're used to kind of just complete consensus or close to complete consensus. Is that possible, you think? Or?
Oh, no. So, look, I think if we look at the last several meetings under Jay Powell, there are a number of dissents. I think there are 3 dissents at the height. So we've gotten used to a much more fractious Fed for sure. It has not undercut their credibility. You heard incoming Chair Warsh talk about good family feud or something of that sort. So I think the market should expect more dissents going forward. It's not the end of the world. And I think as both Powell and Warsh have pointed out, these are very thoughtful people, a range of issues at the table. So absolutely going to expect dissents. I think the bigger question is, when the productivity improvements do come into play, yes, that should put a damper on inflation. But we're starting at a place where inflation is well above the target, and we're starting with the chair and a committee that I think really want to hold on to credibility, and they're going to have to move in order to do that. It's just not going to be, jaw-butting inflation down is not the reality of the day.
This is exactly why we still have such this sizable bet, that we get a hike. Maybe today, maybe soon. Gentlemen, for now, thanks. Roger Ferguson, Jason Trenner. Let's get over to Capitol Hill, where we have Emily Wilkins, I should say. OpenAI Sam Altman has been meeting with lawmakers, Emily. What can you tell us about that?
Hey, Kelly. Well, yeah, Sam Altman was on the Hill meeting with both Democrats and Republicans about OpenAI's new model. He also said that he would be meeting with White House Chief of Staff Susie Wiles. This, of course, coming as the White House is finalizing a framework on how to deal with these big AI frontier models. They've got an August 1st deadline to put it all together. Now, Altman did tell me that he has seen the framework on it. He didn't want to classify it. He was rushing off to another meeting, but I asked him if he had any changes he wanted to make. He said nothing specific. I also got to ask him a little bit about any kind of legislation that he wants to see. We are expecting a markup of a number of AI and big tech bills on the Hill next week. Now, Altman didn't have any specific policies, but we also asked him a little bit about his thoughts on open source. He said it's part of the ecosystem and that there is a spot for both open and closed models. Certainly a lot of senators have an interest in meeting with him. NVIDIA CEO Jensen Huang appeared the other day. It's not really clear that Congress is going to have time before the end of the year to pass any major laws on AI, but there is a major defense bill coming up. You could see some stuff in there on national security. And obviously, this is a bipartisan issue. So we fully expect, no matter what the results are come November, for this to be an issue when Congress gets back in the new year. Kelly?
Emily, I'll pick it up. Emily Wilkins, thank you very much. Before we go, very quickly, AI, inflationary, deflationary, neither?
I would say longer term, it's very deflationary. I think it should be, or disinflation.
Even with all the wage increases, materials cost increases?
The productivity gains, I think, will offset that. And then, and in terms of employment, I'm largely of the view it will create more employment, but in other places that we can't even imagine. So that's my very hopeful view.
We like hope.
We like hope.
It's a good thing.
Hope's a good thing.
Coming up next on our countdown to the Fed decision special, where oil may be heading next, depending on what the president and Iran do. Bob McNally is here.
And stocks are still under pressure, but we are off of session lows. Dow's down about 700 right now. We've got about, less than 40 minutes until the Fed's decision on interest rates. And our special live coverage from Washington continues after this.
Modern enterprise. It's a lot of moving parts. Comcast Business helps you orchestrate it all with SD-WAN that keeps 150 hospitals working as one. Zero Trust Security that protects data for a bank with more than 2,000 branches. And AI-powered networking that's optimizing traffic across 5 continents. You might need this. It's simple. When you add it all up, no one does business like Comcast Business.
I got recurrent UTIs all the time until I tried Eucora. Eucora's Flash Advance Plus helps reduce the risk of recurrent UTIs. I take Eucora everywhere I go. This works very well. Delicious.
Okay, back. So we saw SPY run up nicely. Let's check on the race. Let's get back to the race here. 5 seconds left. It looks like Brian B might be pulling in. Brian B, congratulations. Congratulations, Brian B. We might have a viewer, we might have a team member named Brian B as well. I'm not sure if it's the same person, but Brian B. Nonetheless, send me a DM in the Discord or a DM in the free tier Discord. Use the code 7. Okay, use the code 7 to claim your prize. All right, so Brian B, congratulations. We will do another giveaway. If we can get to 150 likes. All right, so we're now less than 30, just slightly over 30 minutes away from the decision. We saw a nice bounce off those lows. So congratulations to Brian. Congratulations. Let's close that out real quick. Actually, we'll put this to the side just in case. All right, so if you haven't already, guys, if you're just joining us, let's reset the room. We go live every single day at 9:30 a.m. with the most value-packed live trading show, breaking down charts behind packed events and talking trader mindset. We are currently looking at SPY here, waiting for the rate decision. Of course, more than likely, we're going to get no change in the rate. We saw a nice little bounce, more than a little bounce at this point off of this 732.06. This is that June 29th low. We saw a bounce off of that. We saw a nice acceleration. We spent some time in this territory. Separation comes in. Downward compression break sends us back at 735 and eventually back into that VWAP, and now we're currently above VWAP. So before we hand the market over to the Fed chair, a couple of things are true. We're trading slightly above VWAP. Okay, we're trading back within prior day's range. And the Qs are trading within prior day's range, along with the Dow is trying to get back above VWAP, and small caps are trying to get back within prior day's range. Okay, so this move off of those lows, guys, that was really significant. That sent us to the upside for about 6 points. Okay, close to 6 points back to the upside. Almost a full percentage point back to the upside. All right, so question now becomes, let's say we're going to hand the market to the Fed share between this territory here. And just in a few minutes here, we'll discuss what strategy I'm looking to use, all right, to capitalize off of the volatility. To give you some context, we dumped off the open during the first hour of the day. We spent some time going sideways. Right? About an hour and some change. After that, we broke the sideways action. We broke the consolidation. We sold off all the way to 732.06. And once we got to that area, we got an immediate bounce off of that led us to reclaim 733.38 and eventually 735 and eventually VWAP and eventually that 736 whole number, which is also that daily downside breaker. Right? So that's where we are so far. Okay, so far that's where we are. All right, so currently above VWAP, SPY above VWAP, Q above VWAP, Dow, and of course, small cap still below VWAP. So congratulations once again to Brian B. Funny ducks. It gets intense. It gets heated, right? It gets heated with the ducks. VIX, nice slice and dice through that 1950. It went from that 20 all the way back to 19. Okay, so Webull's giving everyone the notice. Brokers are giving the notice. All right, so futures intraday margin will be temporarily increased from 1 p.m. to 3 p.m. I wonder why. All right, so in the option side, IV is going to increase. Volatile is going to increase. And things can start getting very interesting. Okay. Going back and testing VWAP. So let me mark out some levels, some areas I want to get involved, potential trades. And then we will discuss. All right. Shockwave is no longer here. Cool thing is the indicator already gives this to us. If you have my key level indicator, it's not publicly available. It's only available to our members. It will be publicly available very soon. It gives us the areas I want to get involved, which is awesome. So I'm looking to make some contract purchasing decisions for the calls in this territory. Keep in mind, this is not financial advice. This is lotto time, guys. All right. So if you are trading FOMC, if you have no experience trading FOMC, don't start trading now. If you do have some experience, you know that this is lotto territory. We already did our work early on. All right. If you've been tuning in all week, all trades this week have worked in our favor. I'm just looking to play the traps. Okay, these are the most important areas for me, and I want to see some responses off of. So I'm automatically going mean reversion. Okay, mean reversion on FOMC. Okay, looking to go the opposite of what it's doing. I'm leaning towards those liquidity grabs. So ideally, if we get a nice little drop, okay, I'll be there for it. Okay, if we get a sweep of these lows, okay, just we'll take out all these lows. I'll be there for it. If we knock out this high, fall back under, I'll be there for it. If we knock out this high, get back under it, I'll be there for it. Okay. So I'm not looking to take the trades. It depends how I want to make the entry. I want to see what the candles look like, how things are moving, environmental conditions at the current moment. Right, I might do an initial entry coming into it and then do another entry leaving it. All right, so I might do multiple entries, one single entry. We shall see. Right, but nonetheless, guys, we're less than 20 minutes away. Less than 30 minutes away, I should say. 28 minutes to be exact, away from the decision. So speaking of the decision. Okay, no change, 73% chance. 73% chance. So at this point, that's basically, don't want to say guarantee anything can happen, but close to guarantee. Let's just say this. The market will have a bigger reaction if we do have a change, if it's a cut or a hike, as opposed to no change. The market is probably pricing in no change. Okay. Look at this hourly, guys. Who's in charge in this hour? Who's in charge of this hour? Spot on the reversal. Yeah, so boot camp, guys, make sure to sign up for the boot camp. Okay, make sure to sign up for the boot camp. That's going to be live, all right? So there is no payment for the boot camp yet, all right? So make sure to click join the wait list, all right? This is going to ask you for your email, so when it's available, we're probably going to do maybe 10 to 15 students at a time. I want to keep the class size very small, all right? It's going to be first come, first serve. Boot camp, make sure to sign up. And then when it's available, I will send the link to the people that do sign up first, okay, to make the purchase of the ticket. For strikers who did win any previous giveaways, you sent me the DM previously, you have a free seat to this boot camp, okay? So this boot camp that's coming up is live, SPY, Scalp, and boot camp. I dive into the exact system that I use, right? My A+ setups that I use, all right? We go over that. We start to really dive deeper into the technicals. We go over synchronized selling, synchronized buying, how to use different tools and resources, how to use the VIX, how to use crude, how to use different asset classes, sector rotation, all the things that I do every single day, guys. We go over that in detail, and I try to bottle that as much as I try to bottle it during these live streams. All right, if you can put the pieces together, it will make sense. But this is going to be a classroom environment live, where we go over everything, all right? So everything's going to be laid out for you, and we're going to work in a small group to make sure that you understand the things that are taking place, all right? So, of course, the course is already available. You can make that purchase with the bootcamp. Click the join wait list, and then you'll be first to know, okay, on how to navigate these markets and how to scalp, SPY, okay? And the unique thing is with our system team, all right, we can trade every day. All right, not trade anything and everything every day, but there's going to be an opportunity for you every day. Okay? That's the awesome thing about the system. So probably in this territory, in between this territory, I'm looking to get the 735 calls off of this territory. Off of this territory, I probably look to take the 730 puts. Over here, off of this territory, I look to get the 735 or 735 puts. Okay, 735 puts up here, 730 puts here, 735 calls here, possibly 735 calls off that. Right, just waiting for the volatility. So best case scenario, okay, we take two trades, both work in our favor, of course. If both get stopped out, no harm, no foul. I'm looking for big appreciations. I'm not looking for 5% TPs, 15% TPs. I'm looking for home runs, all right? So the nature of the risk is you have to take those home runs, all right? So this is by no means a strategy you want to start. You want to use significant size behind, all right, because you control very little. But we're just looking to capitalize off the opportunity if we are right to get that massive push in our favor. As we currently sit here, IV spiking towards that 55 territory. My estimate is that IV peaks into 60. By the time we get to close to the decision, 10 minutes out, if the VIX is at net 20. If the VIX is at 20, there's a good chance IV will be that high as well. Okay, how do you DM me? Make sure to go to smartactiontrade.com, go to the community tab, all right, and go to join free, all right? So make sure, for those of you who do want to join our community, guys, live trade with me every single day and access all the tools and resources, make sure to sign up here as well. Use the code TRIAL30, save 30% every first month. All right, so Brian, congratulations. How long you been trading? So trading going on close to 7 years, right? So it's not overnight. But I started with the investing side first. Slowly started to invest, and you just learn more and more and more and more and more and more and more, and eventually you get to the trading. All right, so Brian, make sure to send me the code as well. The code. Send me the code. So SPY sitting right at VWAP, slightly under VWAP. So currently the only index that's above VWAP is our friend QQQ. Sometimes during FOMC you get those initial taps and reaction. Sometimes you get the complete drop, okay, absorption, and then reclaim. All right, so we'll see which presents the opportunity. The last FOMC, very lackluster FOMC. All right, so from a policy standpoint, all right, a policy standpoint, that's for you to judge. But from an opportunity standpoint, I can definitely tell you so far, okay, for it to be a trend, I want to see 3 FOMC meetings. But so far, the Powell environment has been more favorable. All right, it's only been one under a Warsh, right? Just from a technical opportunity, volatility standpoint. But we'll see in the next couple of meetings how that takes place. I do have the old FOMC sessions live on the channel, so if you go look for it, you can find it. All right, I believe we traded the last 6 or 7. We probably have more than 10 meetings. All right, 10 meetings recorded on live. That's available to you for you to go review. XLE, energy. So energy ran up. Why? Energy runs up when we start to see the conflict in the Middle East start to escalate, tick a little higher. And energy also ran up last week, beginning of this week. And energy is actually doing something very interesting. Okay, energy is XLE. Okay, so energy ran into some highs, starting to pull back slightly. Right, so it depends on what time frame you're looking at, what time horizon your trade is going to be on, right? But you can see energy when we got the announcement of the conflict, all right, the push takes place. We got the pause, remember the pause over the weekend, and then it starts to drop, and then we got the counter strike today, right? Retaliation strike, and it pushes to the upside. So energy on a pair, energy, XLE. Okay. There's an element of the XLE trade that is tied to the situation in the Middle East, and there's an element of the energy trade that's also tied to AI as well. All right, so really interesting for energy. Okay, so energy currently trading at 58, so 60 will be a critical level. Reclaim that 50. Come into this major resistance, see if we can break back above it. We got some resistance up there. All right, so nothing too major taking place there outside of that 50 reclaim. Okay. Looking at 4 hour. Okay, 4 hour. Let's jump to the 4 hour. So what do I see clearly in front of me if I had to just assess it from the intraday? Okay, energy. Okay, what I did see with energy is, okay, we saw a nice little spike to the upside off of that support. All right, that's primarily fueled by situation in the Middle East that's escalating. We saw a nice little pullback. We didn't have enough to pull back into that 4 hour. We didn't have enough to pull back to that 50 EMA on the hourly. We came into these highs. Okay, we came into these highs here. We started to bounce, catch a bit off those highs. Now the question is, if I took this bounce, okay, then I'll be in a different situation. But if I'm looking to see what's taking place at the current moment in energy. Energy is going back and revisiting the gap down. Okay, the gap down from Friday. Last Friday's gap down. Okay, bounced and it just stuck in the jaws. That gap down from Friday is revisiting it. And the past 1, 2, 3, 4, 5. Okay, the past 20 hours from the 4-hour perspective. Okay, we saw a nice little buy back up. And now we're starting to see some selling pressure after it failed to fill this gap from last Friday. All right, so if it continues to push lower, this current 4-hour candle is inside, which means there's no big decisions being made. If you're using the 4-hour, if it breaks below these lows, that means there's a good chance that the selling from this zone and from the gap fail could potentially lead us back into these lows down here. All right, so there's a possibility for energy to starting to slide if that 58.48, 58.50 fails to hold from a 4-hour perspective. Okay, that would be my immediate current, all right, as of now, analysis of XLE. All right, so failed with the gap. Let's just remove this. Failed to reclaim that gap down. And now starting to slide. Where does it slide back to? It depends on the situation in the Middle East. If it's just a natural sell, if it's just a natural profit taking, okay, then we can see this. Okay, if maybe the situation starts to de-escalate, okay, that might send energy all the way back, along with crude prices all the way back to here. So it just depends, all right? So multi-dimensional type of trade on energy, okay? There's multiple things playing into energy. We know it's big in the AI space. We know it's directly tied to the situation in the Middle East. Okay, so there's a lot of things going on with energy, all right? That's the 4-hour. 1 hour. All right, we've been selling off on the 1 hour, okay, since this 212 that took place. Inside hour gets broken, all right, that sell-off takes place on the 15. Okay, we've been selling off since that time as well. So can the hourly sell-off trigger the 4-hour sell-off? 1 day. That's where we are. 1 week. We're looking to potentially go hammer there. We're setting up for next week. Okay, back to 1 hour, back to SPY. Let me know if that makes sense. Real Zeth. Real Zeth. Don't know how to pronounce the rest. So we'll go with Real Z. Apple calls. Nice catch, Elion. Apple calls. Nice push on Apple calls. Good, good, good. So conveniently, they're leaving this thing smack dab in the middle. Matter of fact, does anyone recall when the last meeting was, FOMC? Let's go into our market recap database. All right, so let's go into here. The last meeting. The last FOMC meeting was July 28th. So let's go back to the 28th. No, not July 28th. That's today. That's the one coming up here. July 28th. It was the last meeting before today's meeting. When was the last meeting? It was June 16th, not July 28th. I had to catch myself there. June 16th. Okay, so June 16th. So this is Warsh's second meeting. All right. Pre-FOMC action. This was on the Tuesday. Nothing much. Just a slow grind lower. Post-FOMC action. Okay, what do we get? Boom, boom, boom. Rates remain. Immediate drop to downside for 7 points. Followed by a buy back up. If you were there with us, we took this trade back the upside. All right, and then we come back into this territory. We just slice and dice. I believe I took this one as well back the upside and got stopped out. Okay. But this was the meeting. So all in all, before Okay, before it did that, I wish I can zoom in a little further. It grabbed these highs up here and it dropped. Okay, so this was rates remain. We see a $7 drop. Between the decision and between the press conference, we recover essentially 90% of the $7 drop. All right, so we're basically back to where we were before the drop, leading into the press conference. Press conference kicks off, and then we drop another, I'll say roughly from 743 to 740, another $4 back to the downside. Okay, so we grab, again, very deceiving, grab these highs, we dump. Deep grab of these lows, reclaim this key level, and we start to pump back up, retrace, reject off a key zone. Look at this, key zone, retrace, reject, back into lows, and we get below that BOG. So to give you some context, the low of FOMC last time, keep this number in mind, was 739.22. Okay, 739.22. Where are we? Okay, 739.22 is all the way up here. So the low of the last meeting, the lowest point was right here. We'll say last FOMC meeting. Last FOMC low. Okay. All right. So this setup comes into play. This grab comes into play. Okay. So we're well below the last FOMC meeting's lows. All right, so we can see some whipsaw action. If we're gonna mimic the exact same thing that took place earlier, okay, it can possibly be a quick grab and a quick drop. Okay. All right, so let the games begin. Let the games begin. I'm gonna get my contracts ready here. Okay, those contracts. Let's see. They're still expensive. All right, they're still expensive. All right, it's midday, so keep in mind, guys. They lost tremendous value, but they're expensive. Okay. So I'm looking at the 730 puts. And I'm looking at the 740 calls. Basically, or you can go 735. These are further strike zeros. All right, so lotto time will be here in 10 minutes. All right. What are your thoughts, guys? What are your thoughts? What are your thoughts? What are your thoughts here? Keep a close eye on the VIX. We're less than 10 minutes out. We'll have the meeting for you as well, guys. All right, so again, smash the like button on YouTube. Less than 10 minutes away from the decision. Let's take a listen to our friends at CNBC.
Group, and I have an understanding of where some of the hawks are coming from. I expect we get a couple of dissents today and a continued hawkish bias. Look, when you're missing your target for 5 years on end, you can say, oh, this supply factor and that supply side factor and tariffs and wars, etc. Eventually, the excuses get a little old and your patience starts to fade. And so I certainly understand the hawkish bias, but given the fact that the economy is pretty good, it's not overheating, certainly wouldn't hike into it.
It does matter, Jamie. There was a Fed paper out recently where they basically proved, using a lot of equations that I'm not going to show on TV because I don't understand them, that Fed moves do move stocks. That ultimately, even
5 minutes, 9 minutes out, 9 minutes out. Spam the like button. Make sure to share the link out. All right. If you're just jumping in for FOMC, welcome, welcome, welcome. Make sure to like the video, guys. Do we finish the poll question, strikers? How do we do today, team? Okay, so 83% of the chat is in the green. Okay, good.
want to talk about the Fed just for a second. I don't think that moving the interest rate 25 basis points is going to do a thing. They have to go on a multi-rate hike path before it actually has any moving parts at all. So think about it. There's only the BOJ and the ECB that have raised rates in 2026. I don't think a dual mandate Fed is going to raise rates into a supply shock. I don't think it's going to happen.
So can I respond to that? So I'm very sympathetic to that view, Jamie, and I think the impact of a rate hike would probably do more harm than good in the perspective you're suggesting from the macroeconomy's view. The only way I think it could be helpful is from the perspective of showing that you really are serious about anchoring inflationary expectations. I mean, at some point, the dissenters are going to say, the view of the dissenters, which I think we'll probably hear at some point today, is that the reason we're leaning towards a hike is because we just don't think the Fed looks serious enough about maintaining the anchor if we don't do something. Now, I've heard Fed officials say that's no reason to raise rates, and I happen to agree with that. But it is a rationale that I do think makes some sense.
Can I add something to that? So I think that there are other levers the Fed could pull. You know, they have to be careful on the balance sheet because it could affect mortgage rates, and that would affect the average person. So they have to be careful there. But there's other things the Treasury can do in tandem with the Fed. Pay more attention to the way they issue, to extend duration, things of that nature that would really help, I think, to tamp down inflation overall.
7 minutes away, 7 minutes away, 7 minutes away. All right, we are about 31 likes away from our second giveaway. 31 likes. Record on stream is 200 likes. Let's see if we can smash that today. I think we got 200 some change last time. All right, so let's see if we can smash that today. We're well on our way. Less than 6 minutes away, guys. Less than 6 minutes away. Let me see if I can get a quick poll question before we... I'll let the poll question be. So let us know. Do we pump? Do we dump? Do we whipsaw? Okay, I would say my expected move on both ends of the extreme is 730.95 and 740. All right, that would be my two extremes. Anything beyond that would be an expansion. So I'm going with the mean reversions. Preferably the first one I'm staring at right now. The one I'm staring at right now is a grab of 730, 727.
Rate decision coming in what, about 6.5?
Give or take.
The longer I talk, the less time it'll be. We should have like a countdown clock. Stocks are down. Bond yields and oil slightly up. We will come back right after a short break, get the decision, the analysis, and then at 2:30 Eastern, the press conference from Kevin Warsh. A lot to do. Don't go anywhere.
Okay. The Dow is primed to test that daily downside breaker. Q's testing that 9 on the hourly. They're currently under it. Let me make a quick cup of coffee here, guys. Okay, give me 1 second. Four minutes away.
Some days the market hunger you. Some days it tests your spirit. The pressure is your character. Though I walk through the valley, I got my hands through the storm now. Early morning, charts glowing in the dark room. And the flicker like lightning before monsoon. Heart racing, future jumping at the bell. One classic, next strong and fail. Used to chase every breakout I could see. Greed had changed and the change had me. Overtrading, revenging my soul. Till the market took everything I stole. Now I move with patience and discipline. Ever lost all lessons from within. see.
One big setup can change history.
Through the valleys I walk.
Pressure test my soul.
Learn risk management.
Before I touch the goal.
Every time I tell a story.
This heart became a lesson.
God was building patience.
Every season.
All through the night, I feel no red days. I got my hands when the market's sideways.
Giants fall when the mind gets strong.
Fans keep pushing when the trades go wrong.
Babylon system won't fear in your heart.
But discipline and wisdom sets traders apart. From the valley to the victory song. Stand tall, trader, keep holding on.
I remember
Days I blew my whole week. Living my promotion made the mindset weak. Finding more trades just to prove I'm right. But God destroyed more accounts than fights. Than a red powder.
Okay, less than a minute and a half, guys. Less than 2 minutes. All right, less than 2 minutes. Okay, less than 2 minutes away. So these are the shallow points and these are the extreme points. Of course, extreme points will probably provide the better trade. Amazon, nice bounce off that key level to 29.47. Less than 60 seconds away. Where is it? Scroll up, scroll up, scroll up, scroll up. Da-da-da. Here. Less than 10 seconds. Less than 10 seconds. And the rates will 3, 2, 1. Pending. Let the games begin. Here we go. Remain the same. Rates remain the same. Rates remain the same. Okay, nothing so far. I want to see a grab of that level. If you can grab it, that'd be great. If it reaches into this territory, that's even better. Okay, rates remain the same. VIX below 1960 to 1950 so far. Initial response, it pushed to the upside. Initial response, push to the upside. Rates remain. You heard it here first.
Well, it's not the Fed's fault and they can't fix it. This is a supply side issue. It's coming from the other side of Washington. I've been running around Washington today. I can see a lot of people to blame, but it's not the Federal Reserve.
Yeah, your point.
Keep in mind, the last FOMC low was 739.22. Okay, the low of the FOMC meeting and the press conference was 739.22.
The Federal Reserve keeping interest rates unchanged at 3.5 to 3.25%. However, the vote was 9-3 with 3 dissents. Logan from Dallas, Hammock from Cleveland, and Kashkari from Minneapolis, all dissenting, and the 3 dissenters preferring a quarter-point rate hike. Other than the notation for the dissent, the statement was exactly the same as last month, or virtually the same. It said economic activity is expanding at a solid pace despite elevated uncertainty. The source of that economic uncertainty is the conflict in the Middle East. It noted strong productivity.
Okay, so far, nice push to the upside. So I did not take this trade here. No grab took place. See if a grab can take place off at this territory up there. We're testing the last FOMC meetings lows. And a bunch of key levels here. So it takes off. Amazon decides to take flight. Tesla decides to take flight. Apple decides to take flight. Apple 345 coming up. Nvidia decides to take flight. Semis decide to take flight. Memory decides to take flight. Palantir taking flight. Alphabet taking flight. Back above 340 for Alphabet. So nice recovery, guys, from the earnings gap down. Nice recovery from the earnings gap down. To give you some context, those contracts before FOMC, they were trading at $100. They're now at $20. The other way, the calls were trading at under $100. Now they're at 180. All right, so no horse in the race currently. What song is that? That is Valley of Victory. One of our songs. The VIX gap down? Yeah, VIX gap down. Okay, that's why. VIX gap down below 19. See if we can recapture 19. Fall back under here. I'll get excited. All right, fall back under here. We have all this room to get into the lows of the day. And look where it rejected off of. Right, exactly off that territory. Last FOMC low. VIX peak back above 19. That'd be a tell. That would be the tell. We're above view up on SPY. Everything's above view up currently, including the Dow. All right, look, this is, got to be honest, guys, this is a muted move. All right. 3 points. And we're not saying this just to say this. We're saying this, okay? And that's a quantitative statement. We've seen the FOMC before. How many times we've seen it? So it's been a muted FOMC. Let's see if the 730 puts can come into play. We can come back into this territory. I'll take those puts to the downside. And what I want to see in that territory is, of course, I want the VIX to get back up 19. That'll be the first lotto. Those contracts are way out the money now, 730s. This will require us to drop all the way into the lows of the day. And those can go 100, 200%. FOMC. So if you're just jumping in, guys, FOMC rates will remain the same. Initial reaction pushed the upside. Very, very muted response so far. We'll have that press conference coverage for you. In the meantime, let's take a listen to our friends at CNBC. We're seeing small caps run up as well. Small caps running up as well. Okay, small caps running up. Everything running up so far. Memory running up. Semiconductors running up. And we typically don't see continuation in FOMC. At least under Powell, we don't see continuation. We see move in one direction and then the other direction. And then maybe back in the intentional direction. So we'll see, right? We're still gathering data. We're still gathering data under this new Fed chair. There's only the second meeting. Yeah, very muted response. We'll have that coverage for you guys, so make sure to stay locked in for the press conference.
It is almost a haiku. 4 simple statements, 4 simple paragraphs with a couple of statements in there. what we've heard from people is this question of whether they'll start to explain their behavior more in the statement. I would say that this does not. It says they've approved a 9-3 vote to maintain the target range, maintain ample reserves. Activity is expanding. They add due to elevated uncertainty.
2:30 p.m. Eastern. In 22 minutes. Fed Chair will be speaking press conference live. We'll have that coverage for you. All right, let's guess the tie color. All right, let's keep things interesting. What color tie? Is it going to be late? Is it going to be early? There's probably some prop bets taking place on that front. Strikers, anyone take anything? One DT 730 puts added. Yeah, sometimes they talk about different random stuff. Okay, let me get back to SPY here. See if I get that break. All right, if we can break below this box here where it's at 730 puts, okay, count me in for this downside appreciation. All right, so I'm only looking for mean reversion. What that means is I'm looking to fade anything. Okay, so I'm not looking for follow through back to the upside. I'm looking for a grab. I want this to be a grab at these highs and then fall back under and get follow through to the downside. Possibly targeting this low here. Or low of the day, whichever one comes first. Okay. If the VIX can peek its head above 19 and hold, that'd be encouraging. But I can front run the VIX, no problem. Interesting, guys. So we're getting some insight. So one of our traders, Doctor, took this to the upside and only got 20%. Right, the IV is really impacting those contracts. And notice how the IV is starting to go back lower. IV crush. So the IV got as high as 56, 57, and then now it's going to 44. So the IV just reduced. So even if you're right, all right, those contracts suffer from IV crush. About a close to 10% drop in the IV. That might be a Doctor. That slight drop might have been what ate those contracts. See how sensitive things are, guys? So that's why the FOMC, guys, is all lotto. So you're just playing with profit. You're playing with something you're willing to lose. Very, 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 very small size. And are the FOMC days behind us, guys? Are the FOMC days behind us? Slice through 730 put territory. Count me in, coach. Put me in. Now these contracts are dirt cheap now. They've been beat up. They're sitting at the lows of the day, the 25 cents. So naturally, those calls as well, when it starts to depreciate, okay, they're going to be cheap as well. Before FOMC, they were worth $1. And that's when we were in this territory. Man, the FOMC days might be behind us, guys. I know it's too early to call, but the FOMC volatility might be something of the past. Good old days. Late with a black tie. Okay, we got our first prediction. Late with a black tie. Let's take a listen to what our friends at CNBC have to say.
I'm wondering if this new Fed Warsh makes my life easier or harder when we have fewer changes. Then does that mean we have to extrapolate more into the change in some form of adverb? What I think is going to happen is that when the Federal Reserve doesn't give us new information, we have to look for that new information elsewhere. We're probably going to get a core PCE that prints at 3.3% tomorrow. We're going to get more data that tells us inflation is heading in the wrong direction.
I disagree. But we can agree to disagree. Who am I? She's the chief, right? I would actually say Main Street looks better than what a lot of the pundits are saying, according to the numbers. Not my opinion, just factually. The CPI, PPI. It's almost like they want inflation to exist. They want things to be in constant chaos. The unemployment numbers are looking better. They're not as bad as people make it out to be. Okay, let's see if we can start rocking and rolling. Go, go, go. We did knock out these highs, all right, just shy of this territory. I mean, 739, if you take the puts there, that's fair. Man, FOMC days might be behind us, guys. I hate to say it, but it might be behind us. Okay, let's begin the slide. Let's begin the slide. Go, go, go. Okay, I'll take it right there. Couldn't get filled at 32. Okay, let me close that and try again. Okay, I'm in the puts here. I am in the puts, okay. If you did take that manager quarterly up 12, this can be very volatile. Hopefully this trade can play out between now and the meeting. Just want to retest off that and bounce. Just want to bounce. See if you can fall back under it. No, we just need the VIX. Can you wake up? If the VIX can wake up, that'd be great. Bounce and retest on, break and retest on FOMC. We shall see. So I'm in the puts. Average fill 26. Oh no, 32. Current price 26, 24. Basically, my line is like this. All right, about 1.5, 1.8 to 1. All right, so that's the setup. Okay, in the meantime, all I want to see is the VIX possibly get back up 19. Let's see how it plays out. Okay, let's see how it plays out. If you have a couple of soft targets, you can use this as your target for soft target. All right. You're going to take some off the top. If it works in the favor, starts to work, okay, we have, of course, is a zone here to address. A drop from here to here, guys, don't be deceived. This is a huge drop. Okay, that's not a small drop. That's a significant drop. That is about $1. All right. In this case, if IV can start to increase, that would actually help the contracts. Okay, if IV can start to increase, that would actually help the contracts. Contracts back to break even. But the fact that the VIX fell below 19, that kind of took that 10% off those contracts on the IV. Follow through is the name of the game. 13 minutes away from the press conference. See if this can present some appreciation before the press conference, so we can do one before, one after. One before press conference and one during. Rock and roll. This is going to be our break-even point. Initially, that was up 12% at some point in time. But now that's going to be the break-even, generally. Right? By the time it gets here, think of it as break-even. This can be upwards of 60% stop out. Okay, 55 to 65%, depending on how quickly it gets there. The stop out will be larger if it sits in this territory and gets there after a long period of time. If it goes immediate, okay, then it would be stop out at less than 50%. Same thing with the reward. Okay, let's start to rock and roll here. If you need a TP. TP1 possibly there, if it gets in there. Okay, that can be a first point. Follow through, follow through, follow through. Since when does FOMC respect support and resistance? Okay, this looks like a textbook break, retest. That wants it to take off. But we don't want it to take off. We want it to slice and dice and seek these lows. Alright, so this is basically trapping all those bulls. Okay. And making them and taking them for a ride. Can we get a clean candle? Can we get a clean candle? In the event that we do get that TP take profit one, guys, those contracts, they could possibly be priced at 60 bucks. Okay, 55 to 60 bucks possibly. That's my projection. Okay, up 12, up 18. If you need to TP, okay. If you're looking for something larger, you're opting not to take that, that's fine. That's completely fine. But I always got to say that. All right? I know I sound like a broken record, but the broken record sometimes has to get played. Disappointing 100%. No follow through. Okay, if this is the new FOMC, okay, let's see if VIX can start to wake up here. If VIX can start to rally, that'd be great. VIX at least push into 1891. Get that drop into TP1. That should get us to 45%. If we can get there before 2:30, that should get us to 45%. All right. Because our backs are against the wall. So that might be the final landing spot before the press conference. Just a lack of follow throughs. FOMC, trust me, guys, I've traded it numerous times on live. This is not how it goes. Okay, so on that front as well, we have to make the adjustment. All right, think of FOMC as extreme volatility. Extreme volatility. These candles just look like a regular day, right? Regular day. So I did see profit upwards of 18. Saving it a drop in the next 5 to 7 minutes into this TP box. That'd be great. Go, 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 go. I like how the hourly is showing a lot of selling pressure. A lot of selling pressure. Okay, there we go. There we go. Go, go, go. Now contracts, they're not moving. Okay. So we grab these highs. Is that enough? All right. We grab those highs. And the next lows we have available are these lows down here. This is going to be shift lows. So at least come and grab these lows. Got that TP box. Okay. Well, this is FOMC trading, guys. You can trade vicariously through me. This is FOMC trading. 15-minute, come knock out these lows. That'd be great. $15 is inside. We know the hourly is getting put to the test. Hourly is experiencing some pressure. We have 34 minutes on that hour. 30-minute has 4 minutes. We have the flip of a shift coming up in 5 minutes, and that flip of the shift happens to be when the press conference kicks off. All right, so press conference in 5 minutes. All right, so more than likely this would be the safest TP in this area. All right, if we can get into that territory or that the 18% TP possibly. If not, to get that move, I probably have to hold through the press conference, but that we'll see. We'll see. We shall see. Still have 4 minutes. See if we can get into this territory in the next 4 minutes. Okay. There's a lot of liquidity down here. It needs to grab. Okay, some of these lows down here. See if we can address it. Press conference in 4 minutes, guys. If you are just joining us, good afternoon. You're tuning into the most value packed live trading show. We live trade every single day. Today we have the FOMC coverage for you. We are live trading FOMC as well. All right, everything you're seeing is for educational purposes. Okay. I am not a financial advisor. We already took our regular trades this morning on Tesla. Puts on Tesla worked out beautifully. A lot of our traders caught the breakdown on SPY, breakdown on the Qs across the board. So now we're just looking to see if we can capitalize off of some volatility from the FOMC decision. I'll put that in air quotes. All right, this is even smaller than the last FOMC. The last one. We just pulled it up. Here. At least the last one. Okay, we grabbed that and fell under, and then we went for 7 points. Okay, this one. We had this 3-point pump, and we're just stuck in this 3-point pump. 3-point range. So half the range of the prior meeting. So less than a minute away. Less than a minute away. Less than a minute away. We'll have the coverage for you. Qs and SPY still inside. So it looks like the moves are more technically sound, right? Rather than algorithmically sound. All right, that's the biggest difference I'm seeing. All right, that's the biggest difference I'm seeing. So this drop generated about 18%. Don't need 18%. Need more. At least a drop into 50% and beyond. IV starting to crank up a little bit, still at 46. 2 minutes, guys. 2 minutes from the press conference. I'm going to hold through press conference then. All right, I'm going to have to hold through press conference. Okay, so Fed chair is coming out. So I'm going to hold through press conference. I wanted to see if I can get a drop before then and take a trade, so I'll just hold this trade through. And see what takes place. Okay, late. Okay, he's here. Let's take a listen.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
Let me know how the audio is.
The committee is continuing its policy of making ample reserves in the banking system.
Okay, here we go.
The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts.
Okay, let's go, let's go, let's go.
It's steering clear of forecasting.
Get that
a
down.
choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of
VIX is
clarity.
spiking, that's good.
For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake. that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft
TP1 hit, bouncing off TP1.
There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussion.
For SPY to really break down, guys, VIX needs to knock out that 19.
Highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips, and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed.
VIX is starting to get near the lows of the day. Keep a close eye on that. Need that bounce off that 1845, 1850. SPY is starting to accelerate.
You've all arrived with questions of your own, so let's turn to them now.
Thank you for taking our questions, Mr. Chairman. You've had a couple months now, or 9 weeks, whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Okay, we're headed toward this next section here. Okay, if we can do one of these maneuvers, I can possibly add to that. Okay. But the VIX needs to spike back up. VIX is collapsing. Aggressively accelerating to the upside. Let's take a listen.
Output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you were right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools Also the authority to deliver stable prices, no walking back from our responsibilities. There was a large majority support for the decision.
VIX needs to hold at 18 for this to even have a chance to get back lower. If it just slices and dices through 18, guys, we can see this thing really start to push into the 740s. 743, 742, even possibly 745. Okay, so currently down on those contracts, close to 80%, over 80%. All right, so all it can give us was this nice little push lower. Was looking for something bigger. Nothing there. Potential add if it can fall back under here. If not, we'll just let it be.
I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close.
See if we can fall back under, or these contracts are toast. If we can fall back under potential add, basically jumbling this and jumbling that. If it continues to go, contracts are toast.
Task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks, Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith of the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a three-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation.
Engulfing candle on SPY brewing on the daily, guys. If we can knock out these highs. Okay, that daily upside breaker's right there. If we can fall back under this, okay, I'll add to it, see if there's a nice little slide. But as of now, these contracts are toast. So outside of this nice little push to the downside, there was nothing really there. Couldn't get past this point there. Okay, let's continue to listen.
Yield preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do with the inflation target. Making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. What we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job in this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. How do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. They matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, so I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in, giving them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Tamaros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning...
All right, spies in this major key zone. See what kind of reaction we do get. Everything's pumping to the upside. VIX slice and dice through 18. So initially we pumped. We start to come trail in. Bounce right off that TP. Bounce right off that VWAP. Continue to accelerate. Push for about, I believe, $6 or possibly close to $7. Coming to this key zone. And we're starting to reject here. All right, so that rejection is not going to be too sufficient unless the VIX can muster up a way to get above that 1777, 1776, and eventually 17. Let's continue to listen.
About the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets...
Power hour is 2 minutes away, guys. Power hour is 2 minutes away. Okay, we'll take this thing into the close. At this point, these contracts are basically fried, burnt, cooked, whatever you want to call it. Unless we can get some kind of drop back below here. If it continues to accelerate, then they're out of here. SPY, nice response across all the indexes, guys. This looks more technically sound. Right, nice push, come back, bounce. It's easier in hindsight, of course. But what we can see is we're starting to struggle here on the verge of going engulfing candle on the daily. Right, so if we do get above that daily upside breaker, 742.79, that means on the daily, we have a nice bright green candle. The past 3 hours, intraday, we're seeing a nice little sell, buy back up. We saw 3 hours of selling, followed by 3 hours of buying. Okay, tit for tat. And buyers drove price above that daily open. Okay. Let's continue to listen. He might take it until 305, 310. We'll see. Let's continue to listen.
By not spoon feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your people...
Okay, Shockwave Lotto's about to appear, guys. Shockwave Lotto. We haven't debuted it. We haven't done power hour trading in a long time. So Shockwave Lotto is about to kick off here. All right. So this might be the first stream where we get to see Shockwave Lotto on live action. Make sure the table shows up. Okay, let me just take it out of default. Shockwave, don't need the trade assist. Don't need the tracker. We go advanced, we go minimal. Beautiful job, Lynn. Beautiful job, Elion, catching your item SPY to the upside.
Inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode. We were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Thank
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can separate the noise from...
See if we can break back below 730, 735 put territory. Okay.
My lens is broader than that, even though the remit is quite narrow.
VIX back above 18.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little
add
bit
right there.
with some of what you said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market...
These are basically to zero. Make or break. I like how the VIX is back above 18. See if this can start to drop. If it can fall back below this territory, that'd be great. Let's continue to listen.
This press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty. So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it.
Testing that PMH.
Like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that Congress gave us, And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5.
Okay, so if you decide to take the puts right here, you should see some appreciation. I know there are lottos. These ones couldn't get turned into monster moves, so best approach would have been on my end. I did treat it as two separate, so what I did is just add it to this one. Right, so still down about 50%. So for this to see any appreciation, it needs to get back below this territory. Okay, so keep in mind these are lottos. Okay, I like how the VIX continues to push. If we can stay above 18, that's encouraging. This runaway might give us what we need here, guys. So if you decide to take this one, small TP, this one, large TP, beautiful job. Now we're only down 12%, okay? Now we were down as much as 93%. All right, so what I did was I added to the position here as it fell as a second setup. Instead of getting different contracts, just decided to add right there the same contracts. All right. If we can get into this territory, we get back into the green. VIX continue to thrive. VIX continue to thrive. Push past that 1845 and we can thrive. 1845, we can thrive. If you need to close out at 12 if you like. If you're waiting for that drop, let's see if the drop can take place back into the 730 put box. Okay, let's continue to watch.
Compared to, you said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that...
Up 16%, guys, back in business. Back in business. Up 16 TP. We went from minus 93 to 16. If you need to TP there. Okay, actually, you know what? I'm going to take a majority off right there at 23. Okay. Up 31. From minus 93 to 20%. I'll take it. Okay, so majority off. Down there, and then last little bit, if you can go a little further, that would be great. Don't get back above PMH. All right, so we made it work somehow, some way. All right, so essentially the logic was, of course, okay, the best approach would have been, okay, treat this as one trade, take the profits there at 18, and then this breaks down, take it there, you win both ways. If you decide to take one and add to it, you can take 20+%. If we close above PMH, I'll get rid of this last few contracts. So it turned out to be a net positive trade. So it went from down 93 to up 30+% because of the ad. Okay, so that's the nature of FOMC. All right.
And that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets ability to sort of.
Probably next year. All right, next year. What I mean by next year is in 2027. Okay, we'll start to explore how to trade and how to layer it into your position. All right, we're strategically rolling these different elements of an entry model out so we can bring everyone up to speed. Okay, how to position yourself to add, to get a starter. All right, of course, now we're only use that one entry, right? But eventually we'll start to show you how to properly engage those type of entries as well. All right, so major comeback there from minus 93 to plus 20. Now let's see if this thing can go to VWAP. If it gets above PMH, I mean, these contracts that I do have, I can just let them go to zero. It's just very insignificant. The majorities have been already taken off. All right, so give me something or go to zero. Okay, make or break. That'll be the approach. Okay, so that's it. That's what it takes, guys. That's what it takes. That's what it takes. Which strike price? Strike price here, 730s. You can take the 730 here. This will give you, if you had an entry here, this would give you a good amount. This would give you at least 60-70%. The reason why it was only 20% for me is because I'm coming from drawdown. All right. This one at 730s here, they've yielded about 18%. Okay. So I decided to hold through the press conference and then add to it, treat one position as two trades, if that makes sense. All right. So good. Shockwave 15, Shockwave Lotto's coming up too.
It'd be
Appreciate it,
in
Leon.
this room, and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case. That this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy.
Shockwave Lotto. Shockwave Lotto's here. Okay, Shockwave Lotto is here. See what takes place here. So again, guys, 150 likes, we'll do a giveaway. If you've been tuning in since this morning, you saw the trade we took earlier, and we just saw the FOMC trade as well. Okay, if those contracts continue to go, then they would get cooked and they'll go to zero, and that'll be the first loss of the week. Okay, but if you're using a large position, you cannot let the contracts get cooked. All right, you cannot let them get cooked. Shockwave Lotto 737.93, put trigger, call trigger 742.57. Wow, okay, event has ended. There you go, guys. Again, lackluster FOMC. If I see it 3 times, it's a trend. So the second time, all right, same kind of thing, not very little movement. Okay, this movement is, I know it's still large, but I'm comparing it generally to what we typically see. Okay, it respected some of those levels. And it didn't grab a lot of highs and lows, right? It just grabbed this, came in. So it was more technical than algorithmic. More technically sound than sweeping levels. All right, so we'll take this thing as close as possible to the close. Does price make its way back to VWAP? We shall see. So 3 trades on the day today, guys. Of course, FOMC Big Lotto. Eventually worked. See these last few runners can at least get to VWAP and beyond. If they can, that'd be great. A couple of you did take trades during FOMC. Tremendous job going with the trend. It was technically sound, all right? It was technically sound. Let's see if Shockwave Lotto can give us a nice signal. Shockwave Lotto give us a nice signal. That'd be great. Up 16. If we get like a post press conference dump, that'd be great. I like how the VIX is starting to push. VIX has some room to run into 1870. If you haven't TP'd already, TP. Okay, if you took this logic, okay, we laid out the rationale early on, guys. Right, again, I can't tell you what to do, what to buy, what to sell, how to buy, how much to buy. All right, but if you put the pieces together and it lines up with your rationale, all right, you can see 730, 735 puts below here. See if we get back to view up. If we get back to view up, this contract can go to 50%. Let's see if we get a dump. Post FOMC press conference dump. Okay. Get to here, those runners will get to 50%. Or close to 50%. To get to 100%, get to 730. 735. All right. A little bit of everything today, guys. A little bit of everything. What I do like is the fact that we stayed patient for our primary setups this morning. We took care of our work early. Okay, that was the main thing. Up 45%. Okay, and that allowed us to have a little bit of fun this afternoon. Okay, if we can blast past VWAP, this thing can go to 50% and beyond. 100% mark would be that 735. Okay, so if you took this breakdown, you're laughing to the bank. Okay, I'll take some more off right there at 45%. Okay, and I'll be down to one last contract. See if this thing can go to, if it can go beyond VWAP, up 75%. And if it's just dumps, let's see what kind of game we can see. All right, 75%. Let's have some fun with this one. Contract, all right. Up 162%, 191%. Okay. Can we get 200%? We can get 200% if it falls below 735. Okay, so 200% right there, guys. Can we go beyond 200? 220%. 250%. I'll use view up on my risk. I'll still manage this one contract. All right. So at least walk away with 100%. So 220%, guys. From minus 93 to plus 220%. I like how the VIX is going, guys. If the VIX can break past 190, this can go to 500%, up 300%. Okay, it's testing this take profit territory. Trying to take profit right there at 280% by all means. If VIX holds above that 19, let's think it's rock and roll. If you're looking for 500%, we need to break here. 735. Okay, I'll close it right there for 200%. Okay. Thank you very much. All right, so 300+% appreciation on those contracts. Down 93% at some point in time. I had to add back in. If it continues to go, that's great. And there we go. Okay, so there you go, there you go, there you go. Okay. And if you took this entry, you will be up 500%. This entry here. This entry here, you took the contracts there. The reason why I didn't get more out of it is because by the time I got here, I was still down about 60%. When I added, I was still down about 70 to 60%. Okay, so there you go, guys. That's how you trade FOMC. All right. If it gets below 735, that can be a 500+% trade. Okay. So we're going to come into tomorrow. Nothing changes. Are we going to try to look for 100%, 500%, 200%, 200% tomorrow? Nope. We're not. We're going to look for our standard setups. Look to take advantage of the best opportunities. Okay. And trade what's in front of us. Okay. And regardless, win, lose, or draw, we're always looking to get back to the process. It doesn't matter how great of a week you're having. It doesn't matter how great of a week we're having. Right? We still have to be stuck, glued to the process. Okay, that's what sets our team apart. That's what sets traders that have been trained the smart action way. Okay, it's a way of trading. It's just not a system. It's a way of doing things. Okay, literally smart action. Okay, making smart decisions, taking smart actions, not dumb actions, smart actions. Okay, guys, all right? These contracts are gone. Okay. So the nature of this type of trading, okay, is lotto type of trading. You cannot do this with regular size. I wouldn't recommend it because it can go either way. The only way you can approach is a size for 0 or a 50% stop. But you can't have a TP that's 5%. Okay. Now I got some nice Momo scalps. Need to shut it down because I'm starting to feel trigger happy. 100%. That was nice. That was a nice ride to the downside. Okay, so those contracts, we got them for $7. They're about to crack $40. Okay. All right. Smash the like, guys. We'll take it into the close. And look at this. So now let's take notes. Always take notes. So what are we seeing? Okay, what are we seeing? The past two meetings. Lackluster reaction pre-press conference. Lackluster reaction during the decision. Okay, somewhat of a larger reaction during the press conference. But the big reaction, take note of this, guys. This is golden, is after the press conference. That's the adjustment we'll make. Okay. After the press conference. Let's take a look. After the press conference. Look at this. Last time. Okay. We dropped initially and we traded within the decisions range. Okay. We dropped initially, we traded within the decisions range, and we finally broke out, and then we just, boom, went the other way. And what did we reject off of? If you want that 1,000% trade, okay, here it is. Key zone. I just used the fuel from the key zone to get that break. If you took the puts if you took the puts right here, okay, lotto. Okay, SAT Lotto, right? Okay, then take the puts below 737.97. Got the job done. Those contracts got as high as 55 cents. So from $7, all right, to $55. And you don't catch anything, guys? Any of my lotto traders? Okay. Again, don't mix up lotto trading with the regular trading. You have to be able to distinguish the two. We use the VIX beautifully as well. Gave us the read. Gorgeous, gorgeous, gorgeous. Checking on our team. I came in for the first time, 187%. Beautiful, beautiful, beautiful. I'll bring donuts. Absolutely fine. Oh, tremendous, tremendous job, guys. Okay. Started my account with $330. Today I'm at $2,560. Congratulations. All right, so it takes a different. I like the late day George trading. It's basically two different things you're looking for. Right? You have to put those two types of approaches in two different bags. All right, the lotto brain versus the textbook following the risk protocol. Less risk, see profit, take profit brain. You cannot mix those two things up. Okay. Okay, tremendous job, guys. Tremendous, tremendous, tremendous. All right, so if you tuned in, if you stayed locked in for the entire FOMC, okay, so there you go. 735 puts. I can't click buy for you. I can't tell you where to buy. I can't tell you when to buy, how much to buy. All I can do is put this on my chart and tell you what I'm looking to buy. Okay, by no means am I trying to influence you or solicit you to buy, but that's just what I'm doing. And everything you're seeing is for education purposes. Okay, so those type of gains, they're not usual, all right? They're not usual 300, 400, 180, 500,000. That's not what you usually get. Okay, trading comes with considerable risk. Okay, it's difficult. But if you can commit yourself to the process and learn these strategies and learn the proper mindset, you can put yourself in position to capitalize off those moves. Okay. You did tremendous. I mean, you're on the phone, Lynn, and you still took 30%. Good, good, good. 10,000%. On the puts. 10,000% probably is if you got maybe contracts that are $1. If you got contracts that are $1 far out, and then you got them all the way to here. That would probably be the 10,000, maybe, like far out, and they start off at $1, or at a penny, I should say, or which is $1, 10x multiple. Okay. This thing is still going, but just know the contract's going to start to accelerate. Shockwave Lotto, boom, breakdown. Okay, we're going to debut the Lotto, the 60, the 30. All those are going to come out very soon, and it's going to be exciting to get those released. So now you have all the tools necessary to manage and capitalize off of open range setups. Okay, now it's a matter of just rinse, repeat, refine, and getting yourself familiar with how to use it, making sure you strictly follow your risk management protocols. And all of these will be released. And if you can continue to do it, be disciplined with it, just like anything else in your life, guys, it's going to be worth its weight in gold. Okay, at the end of the day, all we're doing is clicking buttons. We're not laying bricks. Okay, we're not performing brain surgery. Okay, we're not running into burning buildings. We're not trying to empower the next generation and develop their minds. All we're doing is clicking buttons. All right, so if you can get good at that, if you want to get good at that, you must have a system to follow, and this is going to be game changing. And look at that, guys. That's your 1000%. That's your 1000% right there. There we go. Look at that. 240%. There we go. Poodle with 240%. Okay, well, look, one contract. Okay. This is Lotto. Okay, one contract. Don't discount one contract, guys. $300. Okay, that's how we do it. Because worst case scenario, if this is a Lotto, if this contract crumbles, okay, you lose $130. If it works out, you put $300 in your pocket, and beyond at this point. Look at this, guys. So actually, it's coming into this call territory here. I have no interest in it. Right, it's very late in the day, but now it's coming into 740 call territory. Let's see what happens. So that's going to be a good hint to take some profits. Okay, can this go 3 for 3? Okay. Now the algo is starting to show its hand after the press conference, after the decision. So it's coming to 740 call territory. And those 740 calls are going to be dirt cheap. Okay, you probably can find some for $5, $10. But if you're getting something in the money with substantial capital, your back is against the wall. Okay? So everything is Lotto at this point. Let's see if we can bounce off this 733.36. We have another zone right under it. Let's see where it finds a landing spot. Still a lot of selling pressure on the hourly. Okay. So this is what we do, guys. There's nothing new. This is what we do. And you have to get yourself used to extracting profits from the market. Don't let it be something you get too overly excited about. I'm not saying you have to just be not happy and celebrate your win. All right, but don't act brand new. This is what you do this for. Okay? Because what happens is sometimes when you get overly emotional, right, it's a sign that you haven't been there before. All right, just remind yourself, yes, this is what I do. Okay, this is what you do, right? So it's not something that's out of the ordinary. So let your brain get used to it. When you take a loss, when you get stopped out, this is what I do. I close my trade right here. And that's the best way to combat the emotional ebbs and flows. Okay? It is already up $1.30. Don't think this is tiny, guys. This is huge. This is up $1.30. All right. So with those cheap contracts, it's probably up already 50%. Okay. So TP if you need to. I'm not taking that. I'm done. It's gonna go up at some point. Yep, that's right. That's right. That's right. There's a lot of selling pressure. Look at the VIX, guys. The VIX is out of here. The VIX is at 1950. So if you want to see the VIX get smacked off that 1950, possibly can find a landing spot in this area. What a pump fake. Okay. What a pump fake. Are you still holding those puts, Poodle? If you are, those probably got another 100% on them. Man, look at all the indexes, guys. SPY is headed towards lows a day. This is just tough. All right. So now the action is not over. The next 48 hours, we discussed that this morning. The next 48 hours. All right, it's going to be wild. FOMC's out of the way now. At the close, we have some names report earnings. All right, I'm not going to go cover the earnings, guys. That's too many hours behind the screen. Okay, so we don't want to gas ourselves out on one day. But you can probably find the stream online with the Microsoft earnings. You can go to the investor relations page, listen to it if you like. Okay, unless we continue to go. It depends. It's up to you guys. All right, it's up to you guys. What was I getting? Okay, here. Because during the earnings stream, I just play the earnings. Put the chart on. I don't provide commentary. All right, so what do we have? Meta and Microsoft. Okay, two behemoths. And then tomorrow. So right now the market is chewing the FOMC data. Okay, overnight is going to digest the FOMC data, digest Meta and Microsoft's earnings, and then in the morning at 8 a.m., 8:30, we have GDP. It's going to digest that data, digest PCE, digest unemployment claims, and get ready to chew on Apple and Amazon earnings. Okay, so ton of things. Look at this, guys. The selling can look at the VIX. All you need to do is look at the VIX. If you look at those contracts, guys, they went from $7. Okay, our entry, all the way to $1.35. What's the math on that? Okay, what percentage is that? All right. So 135 divided by 7. Okay, 19x. That's your 1,000% trade. So realistically, to catch a 1,000% trade, what that means is you probably need to catch a move that like this. So when you see people posting 1,000% trades, guys, all right, is because they're taking the further dated contracts. They're taking both sides. There's a trick people use. Okay, what they do is when people start playing the screenshot game, all right, and if it's just about signals, the oldest trick in the book is this. They take both the calls and the puts. Okay, they take both the calls and the puts. All right, so I'm going to go five points out the money, maybe get the calls that are $5, get the puts that are $5. One of these, if the market moves, is likely to go 500%. All right, and then whichever one goes 500%, you just post. You post on Instagram, you post on Discord, you post anywhere. Okay, so always be aware. You should be able, the longer you do this, you should be able to see where the trade comes from. Okay, you should be able to see what kind of appreciation this yields. You should be able to eyeball what kind of appreciation this yields. It's like a carpenter, right? If you're a carpenter for a long time, you can kind of eyeball, right? Of course, you want to measure twice, cut once, but you have a good eye on gauging overall measurement. Okay, that's the oldest trick in the book, guys. So, Shockwave Lotto got the job done. Let's see if I can switch the. Something. Look at this, guys. This thing continues to push. Now those contracts are going to lose value at an exponential rate. Okay, the value that it's going to start to lose, okay, at 350, it's going to be exponential. Because these contracts, they're reaching the end of their life. So if you tuned in, you decided to hang out with us. Okay, you saw these last trades take place. Beautiful breakdown, beautiful breakdown. And SPY, guys, SPY is at the lows of the day. Wow. That 5% pullback is, we're getting very close to it. So the bulls are praying that Microsoft and Meta pick us up. Because if Microsoft gaps down and Meta gaps down tomorrow, okay, we can very well be in the 720s. Okay, no guarantee, but that's a possibility. That's a possibility, so let's check in on the chat on YouTube. Let's get to 150 likes, guys. 150 likes. For those of you who've been tuning in since the very beginning, since this morning at 9:30, all right, that's over 6 hours. That's a full work day. I do appreciate you spending your time. Hopefully you found value. Absolutely sound heals me. God bless you too. It was nice rocking with you as well. How about 7:44 tomorrow? Anything can happen. All right. So, I mean, if it's lottos, sure. If you're okay with it going to zero, that's fine. But anything can take place. Between now and tomorrow morning is an eternity. If you have some size on the line, you're not going to sleep. Especially if it's for tomorrow's contracts, okay? So Shockwave Lotto, okay? Break below here. This is the window you take the trade. This is the Lotto window, guys. Right here. So a lot of brokers don't allow you to buy contracts after 340. Some of them are 330, I believe. Right? So it allows you to buy before most of the brokers cut off. And then you sell, okay? So you don't look for any more signals here. So this tight window. If you still have it, your back is against the wall, okay, into the close. So you have to start to, if you saw appreciation, you have to start to, okay, realize the appreciation. That's about $7. Of course, that takes into account the fact that we're at FOMC. I'm here since 9:03 a.m. Yes, we've been live since 9 a.m. actually. Let's add another 30 minutes to it. So 7 hours. So 7 hours of talking. Okay. Look at the VIX, guys. And IV on SPY is spiking. So those contracts are tough. All right, so don't touch those contracts, guys. Yeah, we spent a whole day together. If you did, guys, if you came in for an hour, 20 minutes, 30 minutes. All right, some days call for all day streams. All right, we're not afraid to put in the work. All right. On days like this, FOMC, all right, if I have the time, I try to make the time. We'll have wall-to-wall coverage. I work 2 jobs today at the same time. At the same time, don't forget that, Lynn. I was at 500%, didn't TP. I closed 85%. Right, 85% still, 85% more than you put in. So tremendous job. And the closer you get to the close, guys, those contracts, any candle that goes against the one candle wipes out 70, 80, 90%. All right, so as you want to TP, okay, the tactics in Power Hour are different. Okay. You want to sell into strength. Because when it's strong, the underlying, when it has momentum and it's strong, the contracts are spiking. As soon as it starts to slow down, those contracts flush to the downside. Okay, so again, it takes a different approach. All right, think of like a regular season game versus playoffs. So we did the giveaway. If I did the giveaway, 150 likes. We did the giveaway. Brian B is the winner. Brian B, send me a DM. Don't forget with your duck number. Let's take this thing into the close. She sized for 0 off these 740s. You can possibly get that trade in right at that 340. If you just take it there, sit through some drawdown. Possibly. Let's see. Market on close here. 10-minute 350 algo. FOMC just did some damage, guys. Okay. The bulls were getting comfortable. Okay, 4 hours of selling, 3 hours of buying. Only to be met by a major key zone. And then whoosh, get that drop. And this drop now sends us below that daily downside target. Remember how powerful 732.06 was? How we bounced off of that? Now we're below that level. Okay, and now we're getting very close to that 5% pullback territory. Okay. So the bulls, the last thing they want to see tomorrow is a gap down. So Microsoft and Meta earnings will be critical. Microsoft can do enough to gap the market up or gap the market down. Okay, so Microsoft, all eyes on Satya Nadal and his team, and Mark. Just going to come down to those two individuals. Okay, let's open up SPY real quick. Okay, 5% pullback territories are right here. We are now how many points away? Okay, less than 1.5% away from 5% pullback. How far away from all-time highs? We are close to 4%, just slightly over 4% away. 30 points. But for a long time, we're in between. So in the near future, we might see a 5% pullback coming up maybe in August. We'll see, right? Seasonality, if seasonality kicks in, August, September, we see a pullback, and then we make a rally back the upside Q4. All right, that's typically the seasonality. All right, seasonality doesn't always repeat, but be mindful of that. You too, Fishmen. Have a blessed day. If you guys are signing off, have a blessed day, guys. We're going to be here for the next couple of minutes. We're going to go over how to join our community, and then we're going to wrap it up. Tremendous day today. Tesla carried us during the first 2 hours. We waited the entire time, more than the Tesla trade, more than the FOMC trade. All right, what I do like is the fact that we did nothing in between. That is harder to do than take those trades. All right, so just like anyone else, I want to take trades in between, but again, I want to stay. I want to stick to the game plan. So basically, for 1, 2, 3, 4, 3 hours, 1, 2, 3 hours, 3.5 hours, we weren't doing anything. All right, just waiting. That's what it requires. Okay, so we took advantage of what the market has to offer. If the VIX gets beyond 20 tomorrow morning, guys, it gets to 21, 22, 23. Okay, gap down is here. In the event, I'm not saying we're going to gap down guarantee. In the event we gap down tomorrow, the biggest danger is what? You have a short bias. Okay? Don't fall for it. Let the market prove it to you as soon as it opens up. Okay, between 4 p.m. and 9:30 a.m., a lot of things can take place. And whatever does take place, don't let that overly influence the things you want to do from 9:30 a.m. Eastern to 10:30 or 11:30. Okay? Last 6 minutes, last five or 6 minutes here. I wouldn't be surprised if we get a tweet. I wouldn't be surprised if we get a tweet or maybe some kind of temporary deal in the Middle East. You have to understand the commander-in-chief is very in tune with the market. He pays attention to the market. I'm not saying he's watching candlesticks, all right, but they have a general idea. This administration has a general idea what the market, where the market is, how it's behaving, how it's performing. 7:30. Here we go. That meme was hilarious. Last 5 minutes, guys, 7:30. All right, so don't discount where we're coming from. Look at this. 7:30 puts. You take it there, 1,000%. You take it there, 300+%. And this thing is not stopping because the VIX is continuing to push. And VIX is at 20. Crude is actually, let me take a look at crude here. Okay. Crude is actually just holding that 85. Okay, it's at 85. So that last thing we want to see is a spike on crude tomorrow. Okay, above 85 and beyond. Okay, so things are getting very interesting. And what a time to be alive, guys. What a time to be alive. As always, guys, if you tuned in today, hopefully you found value. Hopefully you learned something. Hopefully you executed your trades. You managed your risk. If you got stopped out, you took advantage of your setups. If you saw some profit, put some money in your pocket, realize those profits. If you're looking to join our community, guys, make sure to go to smartactiontrain.com, smartactiontrain.com. We're there every single morning, delay-free, ad-free stream at 9 a.m. Eastern. So a lot of the things we do in real time on YouTube, right? We don't just randomly click buttons, all right? We actually have a plan, and we stick to that plan every day. So the better we stick to the plan, the better our performance becomes. If you're looking to join, make sure to do so. There's QR code on the screen. Link is pinned in the description. Go to smartactiontrain.com. Everyone on YouTube should be in the free tier. If you're looking to get Shockwave, make sure to do so, guys. There is a link floating around for $4.97. All right, If you can find that link somewhere, take advantage of it. That gives you access for 1 year. If you can't, 1 year is available here. Starter pack special. I pinned that to the top of the comments, guys. If you're looking for starter pack, 12-month access to the community. Shockwave 15, 1.0, 2.0 included. Okay, lifetime access, coaching call, and boot camp all available to you for one price. All right, this should get you squared away. All right, so for those of you on YouTube, join the free tier. For those of you in the Discord looking to upgrade to yearly, upgrade to the yearly. Get Shockwave. We'll see you guys tomorrow. If you have any questions, put your question in the chat. If not, we'll look to wrap it up here as the market is looking to close. Yeah, this power hour. The past power hours, nothing has been going on, right? So nothing's been going on past few power hours. If this closes below 730, we're inching closer. So to 5% pullback territory. We're inching closer. Look at this weekly. We discussed this with the team this morning. On Wednesdays, we do our midweek check. Okay, so we knocked out these targets. We're directional on the week. We were inside earlier. Okay, so now we have a couple of weekly pivots down there. Okay, outside of that 722, between 722 and where we are, okay, is 725. That's the last line of defense. All right, so this marks 3 consecutive weeks of selling, guys. And I'd argue this selling here is smoother than selling we saw for 4 weeks. Okay, things are starting to get very interesting. All right, 729.21. Let's see what the final close is. Close below 730. That's a major victory for the Bears. Look at that. That's a major victory for the Bears. Okay, last 20 seconds. Do we close below or above 730? Here we go, and we're officially closed. And that's it, guys. We're officially closed. SPY closed below 730 for the first time on the daily in a long time. For the first time on the weekly since the weekly has 2 more days. All right, so it's not fully closed. So on the daily, this is the first time SPY is closing below 730. Okay, since we have not had a close below 7. We have not had a 730 close, guys, when we're in this channel. Okay, our lowest close before that was 731.62. So we had moments where we got below it, we opened up, but we never got to close that low. Basically since May. Close. All right, so we're in beginning of May territory. Okay, so I'm really interested to see what takes place. As always, guys, thank you for tuning in. Make sure you subscribe to the channel. We'll see you guys tomorrow, 9:30 a.m. Eastern. Strikers, 9 a.m. Make sure tomorrow to come in with a fresh mindset. You don't want to fall victim to having an appetite for larger wins. All right, come tomorrow. Look to take advantage of the best opportunities, and let's look to close out the week as strong as possible. On that note, guys, we'll see you guys tomorrow. Will you do this again? Yes, we're live every single day at 9:30 a.m. We're live every single day at 9:30 a.m. Eastern on the channel, so make sure you're subscribed. Make sure your notifications are on. Stay safe. If you're green, stay clean. Of course, you don't want to start moving into futures or doing something else. The market is closed. We'll see you guys tomorrow. Stay safe, and God bless each one of you.
Jesus is the answer. Oh. When the charts went dark, when the road got narrow, he was there. Jesus is the answer. Oh.
I spent years chasing numbers on a glowing screen. Thinking one more win would finally make me complete. Running after green candles like they could save my soul. But prophets make a poor God when they're sitting on a throne. Build my house on sand. Watch the tide roll in. Learning every earthly kingdom has an end. Some valleys look so deep, I couldn't see the light. Some storms got so strong, I couldn't win the fight. But every time I thought my story might be done, I felt the hand of mercy say, my child, keep walking on. Not because I'm worthy, not because I'm strong, but because the shepherd never leaves his own. Jesus is the answer. Jesus is the way. The anchor in the storm when the market starts to sway. Through the highs and lows, through the joy and pain, the cross still stands when everything goes fake. Jesus is the answer. Jesus is the answer. Yesterday and now, the King who walks beside us through every valley found. Yeah, there were nights I sat alone. There's fear inside my chest. Questions without answers. Battles without rest. The shadow of death felt close enough to touch. But Psalm 23 kept reminding me to trust. So I walk through valleys dark as midnight skies. I will fear no evil, for you're right by my side. The rod and the staff, the comfort and grace, the God of resurrection meeting me in that place. I've seen doors swing open that no man could unlock. I've seen peace show up when logic said it could not. I've seen mercy, life story I could never write, turning broken chapters into testimony and life. Jesus is the answer. Jesus is the answer. Jesus is the way. The anchor in the storm when the market starts to sway. Through the highs and lows, through the joy and pain, the car still stands when everything else fades. Jesus is the answer. Jesus is the answer. Yesterday and now, the King who walks beside us through every valley's found. If you're tired of running, if you're carrying change, if you're searching for purpose in success or in fame, the good news is simple. The debt has been paid. Jesus took our place upon the cross that day. 3 days later, the stone rolled away. Death lost the victory. The grave could not stay. Whoever believes, whoever will come, will find forgiveness in the Father's Son. I still trade, I still work, I still plan and prepare, but my hope is eternal and the outcome is there. Because fortunes rise and fortunes fall, the price remains Lord over all. The market can give, the market can take, but eternity rests on a different step. So when the candles flicker and uncertainty grows, I remember the one who's already in control. The Lamb who was slain, the